We're back. We're back. I guess Warren Buffett did an interview today, so we'll be checking that out. I was able to find the audio of it. The paid version is, well, you have to be a CNBC Pro member to even listen to it, so. But I figured it'd be a maybe good stream clip. I don't know. We'll see. Probably not, but we'll see. We'll see. I just don't really feel like reading articles today. Oracle cutting thousands in latest layoff round. Yeah, the market's up a ton today. Nasdaq's up over 3%. The Russell's almost up 3%. Big bounce, but tends to be the case in bearish markets. So we'll see. Snap climbs 13%. Boost stocks value 7x. Oh, it's just someone suggested changes. I think it would take a long time to boost Snapchat's stock 7x unless the stock just squoze randomly. Yeah, we'll look into the Warren Buffett stuff. McCormick buys Unilever food business and deal that values it at nearly $45 billion. We got Nike earnings after hours. Project Hail Mary is the box office proof point Amazon MGM has been waiting for. Tiger Woods had hydrocodone pills in his DUI crash. Or in his pants. Buffett hasn't talked to Bill. That's crazy. That's crazy that that's even mentioned in a Buffett interview. The latest spend up $7.8 billion and acquires Centessa, experimental sleep disorder drugs maker. Marvell stock drop pops 7%. Nvidia takes $2 billion stake. Army investigates helicopter flyby at Kid Rock's home. What? Interesting. Pete Hegseth's broker attempted to make defense investments before the war. Interesting. Okay, nothing I really want to read. Let's see. Magic reveals 47 new Strixhaven cards. Is this the new? I think Skyrexia is the new set that's coming out. Oh, it's Strixhaven. Oh, so these are all cards from Secrets of Strixhaven? Is that the new set? I thought it was Skyrexia, but I guess it's Secrets of Strixhaven. Okay. I might get one of those commanders, maybe. Oh, are any of these in the commander decks, or are these all just cards you can pull? I think these are all just cards you pull. Commander, maybe some of these cards are in the commander decks, but probably not. All right. PS5 price hike has kicked off a buying and selling frenzy. Nothing there. I guess dead stream today. All right. Pretty cool. Liquid Death's giving away a house where every faucet pours sparkling water. What the hell? Disney rumored to move Avengers Doomsday release date. There's a new Avengers coming out. The end of the year. I didn't know they were making a new Avengers. That's pretty dope. What is this? Lego's giving Pokemon fans the chance to turn their creativity into an official product. New competition centered around building Pokemon TCG cards out of bricks. They're building cards out of bricks? Invites fans to recreate the look and feel of a Pokemon TCG card using Lego, with the standout creation set to be transformed into a Lego set. Builds are expected to capture the style of Pokemon TCG, which is known for detailed card artwork. That's pretty interesting. Gotta squeeze every little bit of Pokemon you can. Influencer arrested after faking armed kidnapping for more followers. Nice. Gmail now lets you change your old email name without deleting account. That's a pretty good feature. Why is the stream so dead today? Let's whatever. First surfing dog to be inducted in the Surfing Hall of Fame has died. That's sad. Nintendo warns users not to click on suspicious emails. Genius Game turns your Steam library into physical collection of games. That's kind of cool. Box Room brings your Steam library to life. Box Room's a home decorator sim that lets you design your ideal room from scratch, whether building a bedroom, office, or full game room. You can fill it with desk chairs, beanbag sofas, posters, and shelves to match your setup. Then you can fill those shelves with physical renditions of your Steam library. That's kind of cool. Florida woman awarded $14 million after swallowing nail found in ice cream. That's insane. Okay. K-pop Demon Hunters McDonald's collab. OpenAI's Sora was reportedly losing 1 million a day. How much time till Nike? Like an hour or something, I think. Not really sure when it starts. I think the earnings call is a little bit later. Yeah, the earnings call is not for another like 2 hours, but earnings on every or most stocks come out after hours. DoorDash partners with Rivian spinoff for autonomous delivery vehicles. Company announced a strategic partnership in which delivery company will invest in also tend to develop, accelerate deployment of autonomous delivery at scale. Company didn't specify with micro-mobility vehicles will be used. First commercial product is the 3500 TMB e-bike with a virtual drivetrain, seemingly more tailored to DoorDash's needs. Is the TMQ. This four-wheeled EV is designed to haul cargo while still fitting in bike lanes. Those are pretty ugly, but I'm sure they're convenient for delivering stuff. This one would be really convenient for like food. That one for bigger orders, I guess. Pretty interesting. Seeing the rideshare apps innovate, you know, whether it'll work out for them, we'll see. But seems like one of the few places where AI is actually useful. Autonomous vehicles. Delta picks Amazon Leo for in-flight Wi-Fi starting 2028. SpaceX lost contact with one of its Starlink satellites. That's crazy. Yeah, read all that yesterday. Sophia Turner suffered an onset injury. I think I saw that yesterday. Not really much news today. TSMC's sold out until 2028. Even next gen Arizona fab's fully booked before it has even been built. That's crazy. That's actually pretty insane. That's so wild, bro. Just so many people want chips for their AI data centers, and gamers want chips, or just computers in general. Computer hardware, software, just everything. That shit, it's insane. Bro, what is up with the stream today? Where is everyone? Bitfarms started selling all of its Bitcoin, pivoting fully to AI infrastructure. And a lot of those Bitcoin treasuries and miners are going to AI, which is pretty interesting because they already have a lot of the infrastructure. Bitcoin's flat. Nothing there. Is there any economic data today? House price index. So house prices are still going up, but they're starting to get flatter, it seems. Pretty interesting. Yeah, see, the lowest amount it's increased in ever. Crazy, bro. Real estate is not the move. Unless it's just going to have a massive surge in value randomly. Which I guess could happen, but doesn't seem like it would happen with real estate. Yeah, everything's up massive, except energy. Energy's down. Nike earnings, and okay. Well, I guess I guess my stream's dead. I guess nobody comes here anymore. Whatever. I'm just gonna record this. If I guess I guess I just need to stop streaming apparently. Like this is a joke.
We do have a very special guest today, Warren Buffett, the chairman of Berkshire Hathaway, former CEO of Berkshire Hathaway. And this is the first time that we are sitting down with him since he stepped down from that CEO role. Warren, welcome. It is wonderful to see you this morning.
It's fun to be on.
You are on for an interesting reason. For 22 years, you had been holding an annual luncheon, an auction for a luncheon to benefit the Glide Foundation in San Francisco. You retired from doing that back in 2022 after you'd raised more than $50 million. I think the last auction that you did raised $19,100,000 for the Glide Foundation, and you kind of hung it up and said that was going to be the end. You are back with a new announcement today that there is a new auction that is coming with a twist. This time it's Warren Buffett, Stephen Curry, and Ayesha Curry, and they're going to be having a new luncheon to benefit not only the Glide Foundation, but the Curry's Foundation as well, which is Eat, Learn, Play. And this auction is going to be held May 7th. It starts at 7:30 p.m. Pacific time. It closes on May 14th at 7:30 p.m. exactly. And all of the benefits of that is going to go to benefit these two foundations, Glide and the Eat, Learn, Play Foundation. How did this come about? Why did you unretire from this?
Well, let me tell you first how I got into it, because my first wife, Susie, was living in San Francisco, and she said to me, "This guy is real." and
This guy being Cecil, who was running the foundation.
Cecil Williams, who came to that church in 1963, and it was a dying church in a changing part of the neighborhood in San Francisco, and they weren't glad to see him. The 100 or so parishioners that were left, but he turned it into something that became it gave hope in life to people that the world had given up on, and I went on Sunday still expecting something less than that, and I watched Cecil, and I could see what he was doing, and he was for real. And so Susie at some point said, "Why don't you do something to raise some money for him?" And so I think she actually selected the idea of the lunch, and then we did the lunch. The first 3 lunches brought $25,000 each because they were localized. And then we got the idea of going on eBay, and then we started getting bids from around the world, and it just generally kept moving up, although it wasn't every single year, but it just put us on the map, and as the final amount, 19 million. Was raised. Now that was kind of raised because it was the last one, I think, I was doing, and a fellow bought it that had bought an earlier lunch, but I didn't make any calls to him or do anything. It just turned out to be, it inspires people, and Smith and Walensky, as you know, covered it in New York sometimes.
Well, that's often where you had the lunch with the winners of this.
And some of them wanted to be anonymous, and a couple came to Omaha along the line because they had some special thing they wanted to talk about. But I think everybody felt they were glad they did it, and I was glad to do it. And
I'm actually gonna restart it because I had to go do something, and I missed it.
AAA Auto Insurance has been ranked #1 for auto insurance.
Ain't nobody want to listen to an ad. This interview live? Nah, it was today though. It's the audio only. I can't get the... There's no video one. Unless someone uploaded it. But welcome to the dead stream, Moose. Hope you're doing good. I don't know where everyone is today. Interview. Yeah, like they have it on CNBC, but it's a paid interview, so you can't watch it unless you have CNBC Pro. But they did upload the audio. So I guess that's all we got. That's all we got, unfortunately. I'd rather watch the video. But unfortunately, there's no video. So this is what we're stuck with. Oh. You would just be staring at Buffett. Hey, that's a good guy right there, bro. Appreciate his old ass. Appreciate his old ass. I hope I can live to 99 and still be like that intelligent and that witty. That guy's a G for his age. He could be like decrepit and like, you know, but he's just like a 99-year-old boss. So I wouldn't mind staring at Warren Buffett and Becky Quick. Becky Quick's attractive, so that'd be a good part of it as well.
Now.
We do have a very special guest today, Warren Buffett, the chairman of Berkshire Hathaway, former CEO of Berkshire Hathaway. And this is the first time that we are sitting down with him since he stepped down from that CEO role. Warren, welcome. It is wonderful to see you this morning.
It's fun to be on.
You are on for an interesting reason. For 22 years, you had been holding an annual luncheon, an auction for a luncheon to benefit the Glide Foundation in San Francisco. You retired from doing that back in 2022 after you'd raised more than $50 million. I think the last auction that you did raised $19,100,000 for the Glide Foundation, and you kind of hung it up and said that was going to be the end. You are back with a new announcement today that there is a new auction that is coming with a twist. This time it's Warren Buffett, Stephen Curry, and Aisha Curry, and they're going to be having a new luncheon to benefit not only the Glide Foundation, but the Curry's Foundation as well, which is Eat, Learn, Play. And
Why is Warren Buffett collaborating with Steph Curry, bro? Yeah, Steph Curry hits the threes on the court. Warren Buffett hits it on Wall Street. He hits the threes on Wall Street. That's a wild collaboration right there.
And this auction is going to be held May 7th. It starts at 7:30 p.m. Pacific time. It closes on May 14th at 7:30 p.m. exactly. And all of the benefits of that is going to go to benefit these two foundations, Glide
and
goats. The Eat, Learn, Play Foundation. How did this come about? Why did you unretire from this?
Well, let me tell you first how I got into it, because my first wife, Susie, was living in San Francisco, and she said to me, "This guy is real." and
This guy being Cecil, who was running the foundation.
Cecil Williams, who came to that church in 1963, and it was a dying church in a changing part of the neighborhood in San Francisco, and they weren't glad to see him, the 100 or so parishioners that were left, but he turned it into something that became
Oh, an ad. There's gonna be ads this whole thing? Come on. No. What's up, Hugh G? This guy here, Steph Curry and Warren Buffett doing a 1v1 game. Buffett skins, Curry blouses. Game. Blouses.
It gave hope in life to people that the world had given up on. And I went on Sunday still expecting something less than that. And I watched Cecil, and I could see what he was doing, and he was for real. And so Susie at some point said, "Why don't you do something to raise some money for him?" And so I think she actually selected the idea of the lunch, and then we did the lunch. The first 3 lunches brought $25,000 each because they were localized. And then we got the idea of going on eBay, and then we started getting bids from around the world. And it just generally...
No way, I didn't know Buffett did his auction on eBay. That is very interesting. I never knew that.
kept moving up, although it wasn't every single year, but it just put us on the map. And as the final amount, 19 million, was raised. Now that was kind of raised because it was the last one, I think, I was doing, and a fellow bought it that had bought an earlier lunch, but I didn't make any calls to him or do anything. It just turned out to be, it inspires people. And Smith and Walensky, as you know, covered it in New York sometimes.
Well, that's often where you had the lunch with the winners of this.
And some of them wanted to be anonymous, and a couple came to Omaha along the line because they had some special thing they wanted to talk about. But I think everybody felt they were glad they did it, and I was glad to do it. And
so why'd you stop?
well, I ran out of gas. And I got to be, 93 at that time or something like that. And it just, same reason I gave up teaching. I taught every year from when I was 21 till 88 or 89. And there just came a period when your body said different things to you, and you should turn it over to somebody, just like I did at Berkshire. I mean, at different times on different things. And so we thought we had a continuation of it all set up, and then for one reason or another, it fizzled. And so the last 2 years, I think the first year some board member made up some member, but basically the auction disappeared.
So they haven't had the funds coming in.
No, and Cecil Williams was about my age, the fellow that did all this, and it got so I couldn't understand him on the phone or anything like that. But all he wanted was this to continue, and so I don't know where the idea came from exactly, but I said I would do one more just to get it started again, and to have Seth Curry join us. I mean, in the Bay Area, I mean, it's just a natural. And
Right, the Eat, Learn, Play Foundation that Stephan and Aisha Curry have set up is in the Bay Area as well. So they're
Exactly.
locally focused on all of these things. For people who don't know, the Glide Foundation was also, it was highlighted in the movie The Pursuit of Happiness with Will Smith. So people may have a little bit of an idea what that's about. Why Steph Curry? How did that come about?
I mean, who can say it better? I mean, he's worked with the kids in Oakland. I mean, these are kids between 5 and 15 or something like that, and he plays basketball with them. And I mean, he's a terrific guy. I haven't met him personally.
But you did talk to Stephan and Aisha.
We had a long talk on the phone, and it's his baby, and he can carry it forth. And incidentally, whatever is bid this year, I will make an equal contribution. I don't think Seth doesn't know this, but I will make an equal contribution to both Glide and to
the Curry,
Seth's Foundation.
Yeah.
And just go on to new heights. I mean, and Seth is the hero millions and millions of people. So I really think it'll work. I think it'll continue to be what Cecil hoped it to be, and it would have killed me to have it just die off. And as much what Cecil poured into it himself, he believed everybody was worthwhile, and the world had given up on these people, and he may have started giving a little bit of food to them, but before he got through, he was doing all these things at the Glide, and he never gave up on anybody.
And I know you said that Ostrid really liked him too.
Oh yeah, yeah. Well, Ostrid's my second wife, and you couldn't help but like him. I mean, when you watched him up there with people that the world had given up on, and he says to them, "I'll feed you. I'll have a bed for you. We'll have a vocation for you. You know, we're not going to give up on you," and never did.
Warren, this is the first time that we're sitting down with you since you stepped down from the position of CEO of Berkshire Hathaway.
Yeah.
It was a long, long run, very successful run. How is your life different today?
Well, it's not much different, except for I mean, I go in every day.
To the office.
Yeah, I go in every day to the office. I don't accomplish hardly anything. I mean, in terms of, it just takes me way longer to do things, and Greg is so good. It was kind of embarrassing how good he is, because he has covered, you know, we've got about 200 businesses within Berkshire, you know, that came about, and I can't name the managers' names or their wives' names, and I haven't seen them, you know, in a long time. It was easier just to write the letter once a year and kind of do my own thing. Greg covers more ground in a day than I would in a week, even when I was at my peak, let alone my present condition. So it's a move that, in many ways, I could have done it earlier, and Greg would have been better than I was. But, you know, I can still contribute just a tiny bit. But
well, are you still involved in making investments at all?
yeah, yeah. But I won't make any that Greg thinks are wrong, and he'll run. He's starting to get a few calls, and he'll call me about them, and like me, he doesn't like them, you know. But
Calls for deals, you mean?
He'll keep me posted. Yeah. Well, it's investment bankers calling him, and they'll sell them. You know, they'll try and sell anything, but I cut him off in about 10 or 15 seconds, and he spends more time with them. But I don't know where he gets this time, because he plays hockey with us. I mean, it isn't like he's as fanatic as I was, you know, in terms of running the place. But with no more apparent effort, he just covers so many bases.
Well, in terms of what you're...
What's up, AA Ron, Patel, Isaiah? Hope you guys are all doing good. Yeah, we're just listening to Buffett. There's a new interview that was posted today, and it's only audio, unfortunately, but yeah. And then once this is done, we'll be covering some Nike earnings. Pretty boring day today. I don't really feel like reading articles.
You're doing with investing, I mean, it's a huge amount of money. How much cash does Berkshire have on hand at this point?
I don't know the exact number, but it's not much different than before. So it's probably north of $350 billion in cash and treasury bills.
Yeah. So
we bought $17 billion this week.
$17 billion of T-bills?
The T-bills.
Berkshire's the largest owner of T-bills?
I think we're probably the largest bidder, and ironically, I got involved in Solomon because they bid for too many bills, and I don't think they'd get mad at us now if we bid for too many. But you're not supposed to go over 35% or something in the auction, and of course you bid through the primary dealers. But I don't even know the mechanics that well. But one fellow in our office handles all the mechanics of the stocks and bonds we buy.
Mark Millard.
Yeah, exactly.
Yeah.
And any place else, they'd have 25 or 30 people.
Now Taxes is a TurboTax expert doing it all for
Come
you.
on,
By
bro. You're ruining the interview with this ad, bro.
He's down the hall about 20 feet. And about every hour or hour and a half, he brings me in what we've done. And
What Berkshire has done just in terms of the markets that day?
yeah, I call him. I call him before the market opens because I see what's been going on, pre-market, and probably change the limits only. I don't get lots of different stocks or anything like that. But every now and then I'll introduce something, and I will change limit prices daily.
But you don't do that. You don't check with Greg before you're doing that. You check with Greg on a regular.
Well, Greg gets the sheet every day.
Oh, he does too.
He doesn't get it quite as fast as I get it. I mean, but it probably gets sent over at the end of the day or something of the sort. And if Greg differed with me on anything, we wouldn't be doing it.
But you're still making new purchases?
Pardon me?
You're still making new purchases?
Got one tiny purchase, but we aren't finding things that we weren't finding them before.
Well, let's talk about that. The market has come down substantially.
Not substantially.
Well, you've got both the Dow and the NASDAQ in correction territory. It's the worst performance on a quarterly basis for stocks in about 4 years. Do things look cheaper to you?
No. 3 times
Wow, that's
since I've
crazy.
taken over.
That's crazy that even as the market's down quite a bit, Berkshire's like, nope. That's what I was saying, though. Even as the market drops, GameStop's still the only attractive investment, in my opinion.
Sure. It's gone down more than 50%. I mean, if you look at the markets of, the worst probably was the 2007-8 period, although there was that one Monday when you had 21% in a day. I mean, this is nothing. I mean,
Well, this is nothing to make you get excited and think there's huge valuation drops.
if they're 5 or 6% cheaper, that doesn't. We aren't in it to make 5 or 6%. I mean, but we aren't a big seller either. In the end, we own businesses. Sometimes they're wholly owned, sometimes they're partly owned. That's what I like to own. And 2/3 of our money or more is in our businesses. And we bought Occidental Chemical on January 3rd. That was $9.7 billion. And as far as I'm concerned, that's got some advantages, some disadvantages versus owning a stock, but it's got the same principles attached to it. It is a business, and it's a business we expect to own, indefinitely. I
mean, it doesn't sound like you're necessarily finding businesses that you want to own flat out either, not just purchasing portions of them, if you've got $350 billion plus sitting around.
Yeah, and we get calls all the time, and they're silly calls, but like I say, it takes me 5 seconds to say no. Greg's a little more polite than I am, but I just as soon get the calls just to see what people are doing. But they aren't offering anything that's at an attractive price, and what they want is a trade.
Yeah. Are you waiting for the next big drop in the market to deploy that cash? And if so, do you see that coming?
Yeah, if there is a big decline, we will deploy. I mean, but we will deploy it because stocks are attractive or businesses are attractive to us. And we are not planning to sell them next week or next month, so we want to be right on them.
Right.
And we've had our American Express stock 30 years without having, Coca-Cola close to 40 years, 35 years. And on the other hand, there's things I change my mind on fairly quickly. But the goal is to own the own businesses. And when we buy Occidental Chemical, we expect to own that 50 years from now. The world can change in some way, but that is, we do not buy that with the thought of resale.
You've sold a lot of a stock that's done very well for you, Apple.
Yeah, well, I sold it too soon.
Yeah. It's made
But I
billions
bought
of
it even
dollars.
sooner, so it worked out. Yeah, I think we've made over $100 billion in that pre-tax.
Dude, Buffett is such a G, bro. I mean, that's how I view GameStop, though. I should be able to hold GameStop for the next 40, 50 years and have pretty consistent appreciation, hopefully, And it's one of the only fair value things in the market. Wonder if Berkshire's looked into GME. I mean, and they probably can't buy enough GME to make it worth it, I'm sure they've looked at it, but maybe not because it is so small. I would think they can't even buy enough to make it worth it.
But you're regretting it? You say you sold it too soon?
No. I don't have any ability to predict what stocks will do next week or next month. And I will buy them if they're cheap. I'll buy a whole lot of them if they're cheap and I think I really understand the business. And Apple is still our largest single investment.
And you like it that way?
Yeah, well, if I didn't like it, I could sell it. I can. And I think it's a remark. It's better than any business we own outright. Now, we own a railroad that's worth more money than our Apple position, for example. They're both looked at the same way. I mean, they're both businesses. I think it's more predictable in a certain sense that the railroad will be around 50 or 100 years from now, but it doesn't earn the rate remotely on capital that Apple does. I mean, Apple is a business that you've got one probably, and your kids have got them. I mean, it's
not one. We've got like 20 of them.
Yeah.
With the devices.
And actually, the Bell Telephone Company was that way at one point, but they were regulated.
Well, do you worry about regulation coming for some of these big tech companies, in particular Apple?
I think the consumer's in love with them too much. I don't think Washington will do anything that really destroys something that every one of their voters likes, and they're using themselves. I mean, it's a remarkable product that way.
Yeah.
Just think of something that is as useful as the Apple is. I mean, it's Tim Cook has done better with the hand that Steve Jobs. He couldn't have done what Steve Jobs did, but Steve Jobs handed him a hand that Steve would not have done as well. Steve picked him. I mean, when you get right down to it. And Tim is a fantastic manager, and he's a good guy. And somehow he gets along with everybody in the world, which is, that's a technique I wouldn't have, for example. And certainly my partner, Charlie Munger, wouldn't have had it.
No.
But I'm very happy to have it be our largest holding. I was not happy to have it be as large as almost everything else combined.
Okay, that makes sense.
Although at a price I was.
Right.
and it could.
Build it up.
It's not impossible that Apple would get to a price. We would buy a lot of it, but not in this market. I mean, it just isn't going to happen in this market.
How much would stocks have to come down for you to think that this is really attractive?
Well, it depends on the stock.
Yeah.
Some stocks, now generally speaking, they move together to quite a degree, but I don't think I know what the market's going to do. I do think I've got a reasonable idea of what a business is worth. I have no idea what the stock market's going to do, and I don't think anybody else does either.
You don't necessarily follow tech companies, and Apple people look at as a tech company, but you always looked at as a consumer company.
It's a consumer company.
So what do you do?
So yeah, that's just why I love GameStop, bro. Like, you literally can't predict the market. You can day trade and you can make money that way, but in a sense, you're just gambling. And, you know, you can't evaluate how much something is actually worth and make your bet based off of that. And in my opinion, you know, GameStop is worth around what it's trading at. And if the market completely crashed and everything went to shit, GameStop is still worth at least like $12, $13 as far as book value goes. So it's just an easy bet, in my opinion, compared to a lot of other things out there. And you're just not making your investment decision based off of a chart going up or down. I think that's very valuable.
About all of these tech stocks and the AI trends that are there? Do you try and follow any of that? Do you get involved in any of those industries?
I don't, because I wouldn't be any good at it, and besides, I'm so late to the game. I am not learning new things. Well, I still don't know what to do with the phone, but I just recognize the fact that you know, you're going to have one, and your kids are going to want one, and it is a terribly useful. I mean, it's incredibly useful. And you get something that's useful and offered worldwide, and where to some extent you're a little worried about maybe moving your photos from one system to another. And all I have to do is go out to the Nebraska Furniture Mart and talk to the customers. And that's what I did 60 years ago with American Express when they looked like they were, you know, done for on the solid oil scandal. And I went down to the Omaha National Bank and I said, "Are you getting a premium for American Express tickets?" They could sell their traveler's check for more than Citigroup, Bank of America, you know, Barclays. Everybody had that, and they were getting a premium at the same time that everybody else was worried about them getting out of business. And the same thing when they actually started their card. They were going up against Diners Club and Carte Blanche, who had come first, and they came on later. And instead of coming in at a cut price, they came in at a price above the competition. I mean, that says a lot about how consumers felt about American Express.
Yeah. Warren, let me ask you about the economy, because the Fed is in a bit of a quandary right now, just trying to figure out which one of its mandates it's more worried about. Is it worried about inflation potentially rising more? Is it worried about the jobs market and you know, potential decline in economic output? What of those two issues would worry you most if you were at the Fed right now?
Well, if I were at the Fed, the thing I'd worry about always is, you know, you're the reserve currency of the world. I mean, so you've got very smart people, very sophisticated people. The American dollar looks, you know, like nothing could happen to it. I don't see how anything could happen to it. But if it does happen to it, I wouldn't want the responsibility of running the Fed.
But what?
I mean, the world will be dependent on it doing it. And last time, in 2007 and 2008, you had Congress that essentially felt they knew more about it than you know, Secretary of Treasury, and so they really gummed things up when they turned down TARP the first time. And I mean, it was, I think now people better understand what the Fed can print money.
The Fed can print money, and we have a President Trump, who would like to see the Fed cut rates. Would you cut rates if you were there right now? I
don't know what I'd do there. I mean, I think that Jay Powell, when the epidemic broke out, I think he acted in March of whatever 2020, and I think if he'd waited 2 or 3 weeks, it would have been a disaster. Once the dominoes start toppling, they just start toppling, and that line is shorter than anybody thinks, and it topples faster, and I think he did exactly the right thing, and he did it even stronger than Volcker did. You know, I mean, he and Volcker are my heroes at the Fed.
Did they keep rates low for too long? I mean, I think that's as they didn't worry about inflation, as they said it was going to be transitory. Because I think even Powell himself has said that he might wish he'd turned it sooner.
Well, I wish they had a zero inflation target.
Right.
But I mean, once you start saying you're going to tolerate 2%, that compounds pretty dramatically over time, and you're saying to people, if you're getting less than 2% on your money, you're going backwards. And actually, if you pay tax, you may pay tax on the 2%. You know, I mean, I don't like that particular goal. But
so inflation is maybe what you'd be more concerned about. I mean, that's what Alan Greenspan always said.
Yeah, I would care about inflation. I would compare what I really would care about is the stability of the banks.
Yeah.
I mean, the banking system is, in some senses, very strong, in other senses, very fragile. I mean, J.P. Morgan, in the last couple annual reports, reported doing $10 trillion of business per day. Now, that's an unsecured policy. Now, they know what they're doing, believe me. I mean, there's nobody smarter than JB. But I didn't want during the 2008 period, I didn't want anything unsecured, you know, out there for a day. I mean, who knew? Nobody was any good, you know. I mean, the world is very interconnected, and everybody panics. I mean, you know, they may say they don't, but you can call the biggest investment banking firms, and they say, well, they don't answer the phone even if things get bad enough, and if they do answer the phone, they say 10 bid, 20 offered, subject.
Yeah, I mean, Joe will talk about that day that you mentioned where the Dow was down 21%. I think he was, at that point, he said it himself, he was hiding under his desk for the calls that were coming in.
Yeah, and
because when liquidity disappears, it disappears.
21%, and that was some day, and it just kept coming. And most of the specialist firms, which then counted for more in terms of the stability of the markets, they were broke. I mean, as I remember, they went around to their banks and said, just don't pull the loans, you know. But they were supposed to keep making markets, but people just kept hitting the bid, and you can widen the spread out. You got circuit breakers now, all kinds of things, but when people are scared, they're scared. And people, if you yell fire in a crowded theater, everybody runs still. It still pays to beat people to the door. You know, and I get trampled. You know, so I'll stand back there and say everybody to stay calm. You know, but that's because I can't run fast. On the other hand, when people come back into the theater, they come in one at a time. They know they don't have to get into it, but when people panic, they panic.
But is it the banking system we should be concerned about right now, or is it the shadow banking system, the private credit at this point?
It's all parts of the banking system because they all affect each other, and the troubles from one can spread over to another, and well, you saw what happened. I mean, in 2008.
But at risk of potentially, I don't want people to say that you are commenting on what's happening in the private credit situation right now. What do you think of the private credit situation right now? Are there enough concerning issues there that you worry that it could cause a contagion in the banking system?
I don't think I know.
Okay.
I do not think I know what, but therefore I want to be prepared for anything, and therefore we will always have cash around, and we'll have Treasury bills. We won't have money market funds. We didn't have them in 2008. We won't have commercial paper in 2008. There's just one thing that's legal tender, and if you own Treasury bills, and we don't own Treasury bonds way out. I mean, but every Monday the Treasury has to sell bills, and as long as they got to sell, X billions worth of bills, I mean, they can print the money to do it, and they'll do it.
But just to put a fine point on it, you don't think you know what's happening out there. You've had this huge cash hoard north of $350 billion. It's just there waiting for any time. It's not that you necessarily think that there's something on the horizon. It's just the longer time goes.
Sure. No, I always want to have cash, and I never want to buy anything just because people think the market is going up.
Yeah.
I mean, the idea that people think they know what the market's going to do is just crazy. I mean, the idea that they would shout out to the world,
Nah, Buffett, you don't know about technical analysis, bro. You don't know about Fibonacci's. You don't know about triangles, triangular shapes. Come on, Buffett. Come on, bro. The market's so predictable.
something they really knew. I mean, that's like saying if they had found gold in their backyard, they'd come on television and say, "Here's where the gold is in my backyard." I mean, they're selling something.
They want other people to follow, you mean?
Well,
oh man, Buffett's calling them out, bro. The fake traders. The fake wannabe traders, bro. Buffett's calling them out. That's crazy.
they know that there's there's people in the United States and other parts of the world, but you've seen how much they like to gamble. Mm-hmm. And basically, you have this incredible cathedral called the American economic system. Nobody's seen anything like it. I mean, it's the cathedral of all cathedrals, but attached to it is a casino, and people can walk back and forth between the two. And believe me, people like to gamble. I mean, they gamble with the odds against them. In the market, they can actually gamble if they really aren't gambling if they do it. But I mean, if they just buy a stock and sit for 50 years, if they got a group of them, they're going to do fine. I mean, the American capitalism system works. And betting against the house does not work. I mean, it's so simple. But people do like to gamble. I mean,
when you say gambling, are you talking?
On my honeymoon in 1952, we went through Susie and I, we just got in my Aunt Alice's car, and we drove, and we went through Las Vegas at the time. And I watched all these people who were dressed well, and they'd flown non-jets. They'd flown, for many hours, spent much money and everything else to go and pull handles, or do something that was mathematically dumb. And I thought, this is the land of opportunity. I told them we were going to get rich. I mean, how can you have people who have perfectly decent IQs rushing to do dumb things, which they do, and industries build on it. Now it's become legalized, and the more they open it up, the more people like to do it. They like to do it in the stock market, and actually in the stock market, at least they got a favorable expectancy if they just sit tight. Right. But they don't sit tight, of course, if they're gamblers.
So you're not a fan of prediction markets, of legalized sports gambling, even of day trading? Is that basically what you're saying?
Well, I don't think you can stop it once you open it up. And once the states found out that they could pay about 60 cents on the dollar or something like that. Whatever, they may have different systems for different states. There was one state it was legal in when I was a kid, and we've been around for hundreds of years, but then once people saw how that was working, other places took it up. And of course, rich people love it because they don't have to pay. I mean, you know, to the extent that that the states raise money from people who the dollar really means something to them, actually relieves the taxes on me or other rich people. I mean, it's not direct. I mean, but it's the net effect. So I don't like things that make a sucker out of people.
Damn, Buffett just cooked right there, bro. Buffett just cooked. That's from a 99-year-old man, bro. And people are out here listening to like these wannabe traders who haven't even proved themselves in the market, probably aren't even profitable. People would rather listen to that than someone who has like 6 decades of experience or more. I don't know, it's pretty wild. That dude is cooking, bro. Absolutely cooking. That's what most people do too, though. Like, if you're trading options, every time you trade options, the bet is against you every single time. At least in a stock trade, it's a more 50-50. But, I don't know, that's crazy, bro. Buffett just cooked right there.
Yeah.
I don't like them. I particularly don't like them when the government sponsors them. I don't think the government should play its. I don't think the function of the government is to play its people for suckers.
Yeah. My dad has always said the lottery is a tax on the stupid, gambling, same thing.
It's a tax. Yeah, it's a tax on stupidity.
Yeah.
But But I'm not mad at the people that are stupid. I'm mad at the, no, I really am not. I mean, you can't help it if you're, you know, to some extent, if you're human beings. I mean, you're geared that way when somehow, you know, it's developed within the humans. I don't like it when the government that they elect decides they're going to profit off that sort of activity.
Yeah.
And I particularly, I think it's kind of cynical. I don't think you should have a cynical government. I mean, it's
Warren, let me shift gears and ask a little bit about what you think that's happening in the Middle East right now.
What's happening?
What's happening in the Middle East?
Oh.
There's a lot of ways we could go with this, but why don't we start with just what it means for crude oil and energy in particular? Berkshire owns a utility company. What do these higher prices mean?
Well, it means the 2 oil positions we have, Chevron and Occidental, go up a lot, but that doesn't mean I can go around predicting what will happen next. I don't know what's going to happen tomorrow over there.
Yeah. You, for a long time, were involved with the nuclear initiative, I think still are, funding that. And I know your very first priority in philanthropy was the nuclear problem.
I think it's the problem. I think it should. Well, I'll put it this way: when I went to school, grammar school, they told me the sun was going to burn out in 4.5 billion years.
Yeah.
I took that pretty philosophically. I mean, I got to handle that. And now you've got 9 countries, including, you know, the guy in North Korea. I mean, and there will be something happen. And we worried enormously about it when there were 2. And we had really pretty sane leaders in Kennedy and Khrushchev. You know, I mean, you were not dealing with unstable people or anything like that. And, you know, the ships turned around, but people were hiding under their desk with 2. I mean, just think how you feel with North Korea having it and Iran wanting to get it. I mean, it is, and I don't have an answer for that. I mean, we did the right thing in 1938, or 1939. You can go look at, it's all over the internet, the most important letter ever written. And Leo Szilard could not get the message he was a famous nuclear physicist, a terrific one, very funny too. And he couldn't get the message to Roosevelt, but he knew if Einstein signed the letter that it would get there. And he finally got Einstein to sign the letter. And that letter was a month before the Germans started rolling into Poland. And I don't think Roosevelt understood U-235 any better than I do. I mean, but he knew if Einstein signed it, he better do something. And the funny thing is, of course, he was doing it because he was worried about the Germans getting it, and it was actually used on the Japanese. But we haven't learned to live with it. Now we've gone 80 years since then. We've had a lot of close calls. I mean, we've had training tapes put in there that almost got the president to do something. They've had them. I mean, there is no way that the planet has an expectancy of 500 years now when it was 4.5 billion when I was a kid. And we had to do it. I'm not faulting anybody. My dad was in Congress. He would have voted for it. I mean, everybody rejoiced on VJ Day. I mean, but there was no way we could undo it.
But I think the question becomes today, Nikki Haley was just on Squawk Box right before you, and she was saying she thinks the president should go in and find the enriched uranium in Iran right now. And that's a controversial position.
It's a controversial, but I would be for one way or another. If I were the president of the United States, I don't want to be president of the United States because I don't want that. Sorry. I one time asked one president, I said, if the Soviets had launched, so they already were in the air, and our policy was mutually assured destruction, would you have told Strategic Air Command, unleash ours, knowing that it wasn't going to, it was going to just kill millions and millions and millions more people and add to a super polluted atmosphere that who knows what was going to happen. I mean, now we have...
What was the answer?
The answer, well, this president said, he said, I thought about that every day. Because some major shows up at midnight and says, we have incontrovertible, this is not geese above the North Pole. This is not a training tape that got put in by mistake. We know they're in the air. And you've got 10 minutes to make a decision, Mr. President. What do I tell SAC to do? Do we unleash ours? And I used to be on the SAC advisory board, believe it or not. But that was for political purposes, as I put people on naturally, because they're always looking for more money, and they just figured if, and I don't blame them.
But what did the president say? What was his answer?
The president said, I thought about it every day during the time I was in office. He was the next president.
But did not give an answer on what he actually did?
No, he said, I think the answer is yes. I would tell him to do it. That is the policy of the United States of America.
Yeah. So if you were the president today, or if you were advising the president today, what would you say about going after the enriched uranium in Iran?
I would say that one way or another, in the next 100 years, maybe it's 200 years, who knows, but one way or another, something will happen to cause it to be used, and we can't take what's out there now. And if you thought it was dangerous with the Soviets and us with Khrushchev, who was a perfectly rational guy, probably, and Kennedy, just wait till we're dealing with, the guy in North Korea and criticize his haircut or something. I mean, or I would say the most dangerous thing is actually somebody that's got their hand on the switch who is dying themselves or is facing enormous embarrassment, he figures if I go, everybody
If you're cornered,
goes.
yeah, if you're cornered.
Yeah. Now,
So that still rises to the level of one of the most important, and
it is.
yeah.
It's just that I don't know the answer for it, but I do know that it'll be more difficult if Iran has the bomb than if they don't.
Yeah. Warren, I'm going to shift topics again. You have given away almost $60 billion since 2006 when you first started giving money away. The bulk of that has gone to the Bill Gates Foundation. What have you thought about all the emails in the Epstein files related to Bill Gates?
Well, I won't say what I thought about them particularly related to Bill Gates, but I would say it's astounding me how human people are. I mean, here you had a guy that was a convicted guy, a sensational con man, and the percentage of people that he knocked off, I mean, whether it was, he found their weakness. It might be sex, it might be power, it might be whatever it might be. And I don't see how anybody could have pulled that off. And of course, all these figures think that it's going, when he dies, that they basically lied about it before. But I mean,
Lied about their associations with Epstein, you mean?
well, I mean, they've rationalized it one way or another. And now it's all getting opened up, and of course, I'm so happy the guy didn't he didn't stop in Omaha ever. I mean, or that I didn't live in New York. If I'd lived in New York, at some party I would have been at some damn thing, and where people always are asking to take a picture, and I usually do. I'm so used to doing it with students. I always do these gag pictures where I'm picking some guy's pocket or proposing to some woman or some damn thing, and I thank heavens I never came near the guy, and I had read the article in Vanity Fair in 2003.
The one that laid out what a mysterious and strange figure he was.
It went as far as somebody who's worried about libel suits goes.
Well, it made him sound like a fraud, for sure.
Yeah,
I've read that article
the guy
recently
was
at your
a con man.
suggestion.
And the interesting thing is, he got to start at Bear Stearns,
Yeah.
and they knew him. They knew he lied to them on all kinds of things, and Ace Greenberg was a good friend of mine. Well, Jimmy Kane may have been actually running the firm by then, I'm not sure.
Mm-hmm.
But Ace Greenberg always was looking for, he had a guy that, the son of a friend of mine, that he hired just to be his ferret. His job was to look for anything that was old or large that traders might have stuck in their desk. Or I mean, he was worried about people. But somehow, Ace's daughter, I guess, was dating Epstein or something, and that guy must have been the con man of all time.
But it's one thing to be a con man. It's another thing to be trafficking minors.
Absolutely.
It's sexual prostitution.
No, and being prosecuted. And even though he managed to jiggle his way through that thing with, whoever the Attorney General was then, that one way or another, he did not really spend much time in his cell, but he had a way of conning everybody. I mean, he probably, who knows what he offered the guys, to do that. He could con anybody.
Have you been concerned?
He found their weakness.
Have you been concerned? First of all, have you learned things from the Epstein files?
Sure. I can't read them myself because my eyesight is so bad, but I've got a friend that reads them avidly for me, and it is astounding to me.
Imagine Buffett's just watching Voidzilla. He's just watching penguins or something. He's like, oh, that's some good shit.
that anybody could be that successful as a con person. But P.T. Barnum said it many years ago too. There's one born every minute, and men are going to like sex, and some of them are going to like not paying taxes, and whatever it was, he figured out what their weakness was, and then he had this ability to prey on it. But that doesn't excuse the people on the other end. I mean,
right. What are the consequences for what?
The consequences are very likely to be, in my view, same thing that happened back in 1969 when the Johnson administration left, and the Ford Foundation hired a whole bunch of people that were let go from government, and it takes something where Congress feels that they're better off going after the foundations than not, and the foundations have got plenty of, money, and foundations have plenty of more power in Washington. It's kind of irritating. We can talk about that later, maybe. But in '69, I think Wilbur Mills was head of the Ways and Means Committee. I don't remember exactly how it came about, but that was a big revision of what foundations could do.
Okay.
I think this is going to have the same effect.
Is there anything that you've read or been read from the Epstein files that concerns you about the money that you donate to the Gates Foundation? Money you've given in the past, or money that you made?
There was a lot I didn't know.
Like what?
What is very clear. Well, I didn't know a lot of things. There were 3 trustees of the foundation, and I was
Bill,
one of
and
the 3.
Melinda?
Now, we only met once a year. I did not ask probing questions. If I thought I had to ask probing questions, I wouldn't have put the money in the first place. And incidentally, the guy that's CEO of the foundation wasn't necessarily present during all these things, but he's not the real CEO. In the end, Bill ran the foundation, but I learned, I guess, when the divorce action happened, because I resigned less than a month later, I think.
What did you learn then?
I learned that I didn't know what was going on, and which didn't mean something terrible was going on necessarily, but I certainly didn't know what was going on. We didn't, and I didn't ask the questions either, though. In terms of being on the foundation board, I made a decision on it in 2006, and I didn't think butting into somebody's marital problems or anything like that was particularly appropriate at the foundation meetings. But they went through and they talked about all these little things that didn't mean anything, and then they've hired a few people that are really bad news, and I never met any of those people,
You're talking about Boris Nikolic?
Yeah, I don't even know
who's
what
been mentioned pretty prominently in the
I never heard of him, and I was around that guy so far in the proceedings. He looked like a terrible guy to employ. Now, I've employed terrible people, but we've gotten rid of them.
Boris Nikolic eventually was gotten rid of at the foundation as well. Have you talked to Bill Gates about any of this?
I haven't talked to him at all since the whole thing was unveiled. I don't want to be in a position where I know things at the moment. I could get called as a witness.
Are you going to continue to give money to the Gates Foundation? You have every June since 2006.
Well, yeah, actually I agreed to do it every year,
Yeah.
but I've done it around June 30th most of the time, and I'll wait and see what unfolds. the stock isn't going anyplace. It isn't like I'm giving it all away to something else or won't have it. But I'll wait and see what I'm learning. I've learned things I didn't know about something for all these years, and I didn't know how the marital thing would play out. I mean, I just didn't know about it. And, you could guess sometimes that people aren't getting along, you know, at a given time, but that's true in every marriage. There are times when they get irritated with their spouse or something like that, and in any event, I'll just wait and see. And there's 3.5 million or whatever it is pages. I mean, it is astounding.
In the Epstein files. You mean
the Epstein files,
yeah.
and there's a lot of redacted stuff, and obviously anybody that was involved in Epstein, I mean, they've been miserable probably from the moment they learned that things are going to get released, and they can't bury it now. I mean, it's gone too far.
Are there situations? I guess you're caught in a position where if you
the money's all going to get given away. That's
right.
For
if you
sure.
don't give the money to the Gates Foundation, are you in violation of the pledge that you made? Or if you do give the money, are you condoning the behavior that has taken place? That you may or may not. That you may not have. We haven't learned everything potentially yet about.
That's what I want to learn.
Yeah.
I don't have to make that decision today, and I haven't made it today. But I do keep reading things. I mean, or somebody reads them for me, actually. And I was always astounded somewhat by the Epstein thing when it was taking place, but what this reveals about humans and the degree whether it's money or whether it's sex or whatever. I mean, this guy found people's weaknesses, but they did do things.
Yeah.
I don't think, if you ask me my personal opinion, I don't think Bill had anything to do with girls or the island or anything like that. But I am learning things about all kinds of stuff when I read this, and it is ruining one person after another. I mean, it's just astounding to me how bad. People always do things. I mean, there's consensual sex and all kinds of things, but this guy, how many hours are there in the day? I mean, 3.5 million or whatever. There's communications and all the thinking that goes into, and he found people's weaknesses, and boy, did he know how to use it. And he obviously used this guy Boris, somebody, and he used the woman at Goldman Sachs. I mean, it's just every place you looked.
Yeah. Yeah.
I've never seen any, and I'm sure that once you get rid of the redacting, there's a few things, you know, they're going to learn more.
So you're waiting to hear what else comes from the files, potentially
Sure.
what comes from congressional hearings?
Yeah. I think they may change the law on foundations too.
You may think. I'm sorry. You think?
I think there's a good chance, but Congress doesn't act that fast. But I just think that Congress reacts to whatever the public's mad about, and they'll be mad about the Epstein thing.
But you said you think they could change the law on foundations as a result?
I think there could be major foundation hearings.
And the changes that would go after the foundations that would do what? Strip their tax status?
Congress will want to look like they're doing something about it. And foundations have done a lot more lobbying in the past. I mean, hasn't been any anti-foundation lobbying to speak of. Mm-hmm. And foundations are there, and everybody goes to Washington. It's astounding to me how Washington is it's really become important. That's where the money is doled out. That's where the rules are doled out.
Do you think the foundations in general have done good work? Do you think the Gates Foundation has done good work?
Oh, I'm sure they've done good work. I don't think they'd be around if they hadn't done some good work. The question is whether the rules get changed in terms of what they can do, or their taxation gets. I mean, look at Harvard. I mean, you know, once public opinion changes, Congress changes. You know, it's just the way it works.
Are you sorry you've given the money to the Gates Foundation?
No,
so you're happy that it's gone?
Well, I mean, but I wish that certain things hadn't happened, obviously. But I don't. But it isn't like they're stealing money for themselves or anything like that. I mean, Bill pours his efforts into it. Melinda poured her efforts in it. The present guy that runs it does. He's a guy who I'd hire myself. You know, I mean, it.
Mark Sussman.
Yeah.
Yeah.
And I think he's actually the best CEO they've had. You know, and I don't envy his job. But I also think that I'll wait and see. They've got $96 billion that they're sitting on now.
At the foundation.
At the foundation. Nobody's got anything like that.
Although Bill has also said that he plans to spend that money down pretty rapidly over the next 20 years,
I think. He's got plenty of his own money and add to it.
Yeah.
I don't know what will happen. I mean,
there's been, you know, you and Bill and Melinda also created the Giving Pledge, where you got billionaires around the world to sign up and agree that they would give away at least half of their wealth, either while they were living or upon their death. And you got hundreds of people to sign up to that. There's
200 and some.
Yeah, 250 some people to sign up to that.
It's astounded me that we've gotten that many. What Bill has done, and which I give him credit for, is he's taken it abroad, and you're changing the behavior of societies to some small degree. The United States is, now they've got it partly by laws that favor it too and everything else, but the United States is an experiment not only in a lot of other ways, but also actually in terms of private philanthropy. And Bill has made small little cracks in that around the world, which I think, well, it defies centuries and centuries of behavior. So the energy he brings to anything he's involved in is incredible. I mean, you know, I'm too lazy. I'm not going to go around the world. I just, you know, I feel we launched something good, and I feel that there is no one that's a member of the Giving Pledge that is giving less than they would have given otherwise. Now, we never told them what to give it to. We never told them when they should give it. We didn't make it a legal pledge. I mean, but we really got response on that.
There have been some articles written recently about the backlash in certain sectors, technology billionaires in particular, Peter Thiel, Mark Andreessen, who have said that they don't like the Giving Pledge and they think it's woke.
If they don't like it, they don't have to belong. They can retire from it. They didn't make it a legal pledge anyway.
Right.
And there may be any one of a lot of reasons why rich people don't like other rich people, or who knows what happens. But I would say this, that, well, I just would bet a lot of money that nobody is giving less because of it than they would have otherwise given. And a fair number of people, not huge numbers, but not insignificant numbers either, are giving it earlier or giving more. Mm-hmm. The biggest objection that people would raise with me, and it usually was by the mother, was that they just didn't want to become targets of articles about how rich they were. And you can't blame them for that. I mean, they're worried about, they can be worried about anything, but a lot of people joined. One guy even joined because he said, all I want is to have lunch with Becky Quick. I said, I think and he didn't follow through apparently, but
No, I never heard from him.
but I mean that. I mean, if you get a lot of billionaires, you get a lot of peculiar people, but they not that that's peculiar. I know I should present you with that, but it was amazing to me the reception we got, and we just started dialing.
Yeah.
And we hit the obvious tick. I mean, obviously it's fallen off the rate of additions. And obviously, you know, we generally said we're not judging the people. We're not going to judge whether if they made their money in liquor. We weren't, you know, what counts is what they're doing with it. You know, I mean, that's all we're talking about is, for God's sakes, you know, give away half of it. Mm-hmm. And that's so different from for a family that's got a family farm for 100 years and they planned on giving it to their kids and all kinds of things than it is for some guy like me that just made it in stocks. You know, I mean, it would be a big emotional decision if I were like a bunch of, well, you've got certain very rich farmers, you know, that own lots of acreage, and they've been building it their whole life for their turn over to their kids, and they buy the farm next to them and everything. So I think I feel good about the giving pledge.
You said you haven't talked to Bill about any of the issues that have come out from the Epstein files. Are you still good friends with him?
We've had great times together, and he's treated me better than I think he's probably treated anybody else. I mean, he's arranged trips that arranged for the kinds of foods I liked, or the Wall Street Journal being in China, or what. I mean, he's been terribly thoughtful with me throughout this. But I think until it gets cleared up, I just don't think it makes sense to do a lot of talking. For one thing, I don't want to be under. My memory's no good anymore, and I don't want to be under oath in terms of trying to remember everything over 30 years or 20 years the foundation's done or anything like that. I didn't have anything to do with it except I put the money in. But and you may say you can say, well, you're derelict in not doing it, but I'm giving money to my children's foundations. I've never looked at what they give either. You know, I mean, I trust people.
Yeah.
And I think I've trusted very good people, but I think I can see where if somebody gets a guy like Epstein involved in their life, they don't want to talk about it.
Yeah.
You know, I would. I mean, it's been very useful to me that Bill never said, "Come on along, I want you to meet Epstein." I mean,
Yeah.
So he could have done things that would have been screwed up my life. I'd have gone along with him if he'd said to me after the annual meeting or sometime, and he said, you know, I'm going to New York. Why don't you fly along? And there's this interesting guy or something. I probably would have gone, you know. And so I've got him to thank for not doing that. But you can't get away from what happened either. And you can't get away from the fact that foundations are a peculiar, there's something that our country has really endorsed. I mean, charitable deductions and donor advised funds and all of that sort of thing. And that's worth looking at probably more often than every 30 or 40 years. Mm-hmm. Foundations just, what they do is they lobby just basically leave us alone.
Mm-hmm. We have 87 seconds left in the show. Any other thought that you'd like to throw in? Because I don't think we've covered enough ground.
Well, I think the interesting thing is, you've got America, which is the wonder of the world. And at the same time, you've got a great number of people that they're just as much human beings as you or I. And, you know, they may not have the same IQ or anything like that, but I think the differentials are too great, but I also think it's worked. So how do you actually solve all that through an entity which is basically broken down into two sides that sort of automatically vote against each other no matter what the issue is? I mean,
you mean Democrats and Republicans?
Yeah, Democrats and Republicans. I mean,
we have 20 seconds.
It's become more partisan than ever, and we're more prosperous than ever, and anybody ever dreamt. So you have to say capitalism's work, but it still needs, you know, I guess we're finished.
We're finished. 3 seconds. You start. Are you a Democrat or a Republican?
I've been both, and I was actually on the ballot as a Republican in 1960, but and my dad was very Republican, and I went to the Democratic side, and now I'm an independent.
Okay, we're going to leave it on that, and that's enough of a tease till the next time we talk with you. But Warren, thank you very much for your time.
It's today. A lot of fun.
Fantastic. I like how the dude who has Ice Cube in his name said Warren Buffett's irrelevant. Bro, you're listening. You have a wannabe gangster who stars in Disney movies as your username. Like, I don't think you have the right to talk about what's irrelevant. That's crazy. That's crazy. Yeah, that was a decent interview. Nothing too great. I didn't really. It was okay. Dude's getting old though. I just like listening to real investors. You know, there's a lot of people on YouTube and on the internet who think they're like genius, and it's nice to listen to someone who actually has like a proven track record and actually knows what they're talking about instead of just like some Twitter posts. Oh, I didn't stop recording. Whoops. All right, the market closes here in a little bit, and then Nike should report relatively quick. I guess we'll see. I'm gonna try to get this Buffett video exporting so I can get it, upload it real quick. I didn't see that. I would have went off. Yeah, that guy's a weirdo. I don't know. Saying one of the greatest investors in the world is irrelevant. That's it's probably why you're not a successful investor and you're out here buying 1,900 shares of Nike. Just kidding. I don't actually hate Nike. I think it's I don't know where it's at. Oh, it's in the craziest bearish decline ever. I think isn't Nike approaching fair value though? Pretty sure it's getting close to fair value. I haven't analyzed it since last earnings. So it's got to be getting close. I guess we'll find out here in a little bit. What are they? Oh, it's just third quarter. Just third quarter.
We do have a very special. And we talk with you, but Warren, thank you very much for your time.
It's today. A lot of fun.
Very much for your time.
It's today. A lot of fun.
It's a lot of fun. I agree. Warren Buffett should do more interviews before he goes, man. He has a lot of wisdom. Buffett's a legend. He'll be in history books long after we're all gone. I think so. 6 million% in 50 years. That's crazy, man. Every dollar you invested in Berkshire 50 years ago is $6 million. Like, that's insane. That's insane, bro. It'll be a while before that uploads. Was the market closed? Nice. How did GameStop end up doing? Nice. Closed above 23. How'd the market as a whole do? Dow rallied 1,100 points today. Damn, the NASDAQ was almost up 4%. Holy. Bear market rally, bro. I mean, maybe it could be the turnaround, but you tend to see massive rallies like that within bear markets. So we'll see. We'll see what happens. Yeah, pretty crazy day for the market. I guess we'll see if it continues. I wouldn't get too excited. We'll see what happens, though. Am I trading any of the earnings? No, because only beginners trade earnings. I don't need to gamble on earnings. It's a waste of time. I'm going to pretend like I'm trading earnings, though, so I can make a stream clip and make people think I lost a bunch of money, because it's hilarious. That's funner than actually trading. Few 2% up is nothing. Crazy normal day. What do you mean? The NASDAQ's up like 4%. Corey has the worst earnings luck, never wins. I know, man. I'm just so bad at this. Just so bad. I just can't seem to get it. Crazy day last year on April in one day, plus 10%. That was crazy. I mean, I don't know. I've doubled my account before in like a week, so I don't know if 10%'s too crazy. 10% and 2% are pretty close together, but not bad. If you're gonna say 2%'s nothing crazy and then say 10% something crazy, like, I don't know. But if you're referring to the market, I don't think I've ever seen the market up 10%. in a day. So I don't know what you're talking about. Actually, quite a bit of people in here for Nike. I don't remember. I don't remember how many people were in here last time we did Nike earnings. I didn't think it was that many. If there's one thing people like investing more in than a stock going straight up, is a stock that's in a consistent bearish trend. People love that. It's either going straight up or consistent bearish trend. There's nothing in the middle there. Nike's Matrix easy buy. Oh, how's that been going for you the past year? Doesn't look like an easy buy. Looks like a very consistent bearish stock. But good luck. Good luck buying it. Hopefully it works out for you. You can act like you know if it's going to go up or not, but you definitely don't. And I'd definitely be surprised to see you hold for a long time for it even to be worth your time. My average, AMD's average 95, all good. Well, I didn't ask about that. Are you just in here to flex and like talk about nothing? Because I think I'm just gonna ban you. Here, I'll just ban you. How about that? That's crazy. Just can't interact with the randoms, bro. All the randoms think they're so smart. It's like impossible to interact with randoms that come in here. Nah, Nike's an easy buy. It's only gone down for the past 8 months. It's only creating lower lows and no higher highs. That's an easy buy, though. That's, yeah, pretty interesting. Pretty interesting. He has gym for life in his name. I knew he was gonna be weak. Yeah, he should stick to the gym. He should stick to the gym. It's a good buy though. It could be. You don't know that. It could be overvalued. You never know. It's a bet. You click the green button that says buy and you see what happens, but if you like can sit and pretend like you know what's going to happen or anything like that, I would just say good luck to you. Cuz you're just gambling and betting on a number on a screen. I'd be very surprised if anyone's actually investing in Nike because of their business and the future outlook of the business. I think most people are just investing because they think the number on the screen's going to go up. So I don't know. End of the day, it's just you click a button. You click a button and whatever happens happens. There's nothing special about it. Takes no skill to click a button and watch a screen go up and down. I'm currently holding 28K in Nike, and I've swing traded it 3 times over the last 2 years. That's cool. Shouldn't you have more money than 28K then? Because hasn't it been up a lot multiple times? Like, I don't know. How much are you losing on other trades? Like, I don't really know if that's a flex or not. I'm kind of confused by that. Must not be very easy. I grew up loving Nike. Nike's chill. It could potentially be trading around or getting closer to fair value from what I remember. I haven't analyzed it in a while, but still doesn't mean it's gonna go up. We'll see. We'll see. Collect the dividend while you wait. P's down because they've been discontinuing inventory. They have an NFL contract. From what I know, it's down because their income is going down and their sales are going down. Are they not? I haven't, like I said, I haven't looked in a while, but I'm pretty sure their business is declining. They're still profitable and it's still a good business, but it's declining. So I'm pretty sure that's probably the reason why it's down, but I don't know. Why isn't the earnings came out yet, though? Shouldn't it be out by now? I'm going to look at their 10K real quick, actually. Let's see. Why isn't this working? Yeah, see, they went from making 5 billion in 23 and 24, and they only made 3.2 billion last year. That's why that's why it's going down. That's their business is declining. And they had a, let's see, where's their, yeah, their revenues are going down as well. Pretty simple analysis there. Pretty simple analysis. And let's see, what is their assets? Yeah, it's probably just a little bit overvalued, but I guess we'll see if their cost cutting and all the things they're doing turn out for the better. What's up, Germans? Hope you're all doing good. Welcome all the Germans. I think this guy's talking shit. I don't know exactly what he's saying, but I'm just gonna ban him real quick. Don't ever use Sydney Sweet as a reason for the stock to go up. That's why some people invest in things. They're like, "What? Sydney Sweeney's on a commercial? Buy." Like that's literally most people's investment decision making. It's crazy. It's crazy, bro. It's crazy. It's out. It's out. All right, let's see if it's on the website here. It's not on the website yet. By the way, she's mid. I don't actually think I know what she looks like. If I'm just being honest, I don't think I don't know if I know which one that is. There's so many like random famous girls, like I don't know which one's which. It's for some reason not letting me view it. Do they have it on the SEC website by chance? No. What the heck? For some reason, it's not letting me open it. They don't want to see it. They don't want me to see how terrible their earnings are, I guess. Why isn't it working? It's broken. There we go. Here we go. All right, Nike today reported fiscal 2026 financial results for its third quarter ended February 28th, 2026. Third quarter revenues were 11.3 billion, flat on a reported basis and down 3% on a currency neutral basis. Wholesale revenues were 6.5 billion, up 5% on a reported basis and up 1% on a currency neutral basis. Nike direct revenues were 4.5 billion, down 4% on a reported basis and down 7% on a currency neutral basis. Gross margin decreased 130 basis points to 40.2%. Diluted earnings per share was 0.35. So it pretty much just seems like their business is still in a slight decline. This quarter, we took meaningful actions to improve the health and quality of our business. The pace of progress is different across the portfolio, and the areas we prioritize first continue to drive momentum, said Elliott Hill, President and CEO of Nike. The work is not finished, but the direction is clear. Our teams are moving with the focus and urgency, and our foundation is getting even stronger to build the future of Nike. We deliver the third quarter results in line with our expectations, and our team continues to execute with discipline, said Matthew Friend, Executive Vice President and CFO of Nike. Win Now actions will continue to impact results over the balance of the calendar year, and we remain confident in our ability to position the company for profitable growth long term. Revenues for Nike Inc. were 11.3 billion, flat on a reported basis and down 3% on a currency neutral basis. Nike brand revenues were 11 billion, up 1% on a reported basis and down 2% on a currency neutral basis. primarily due to declines in EMEA and Greater China, partially offset by growth in North America. Wholesale revenues were $6.5 billion, up 5% on a reported basis, and up 1% on a currency-neutral basis, primarily due to growth in North America. Nike Direct revenues were $4.5 billion, down 4% on a reported basis, and down 7% on a currency-neutral basis, due to a 9% decrease in Nike brand digital and a 5% decrease in Nike-owned stores. Yeah, it just seems like their business is declining, and I mean, the stock price definitely reflects that. Still a good business overall, but it's just declining. Revenues for Converse were $264 million, down 35% on a reported basis, and down 37% on a currency-neutral basis due to declines all across territories. Gross margin decreased 130 basis points to 40.2%, primarily due to higher tariffs in North America. Selling and administrative expense increased 2% to $4 billion. Demand creation expense was $1.1 billion, flat compared to the prior year, as higher sports marketing expense and unfavorable changes in foreign currency exchange rates were offset by lower brand marketing expense. Operating overhead expense was $2.9 billion, up 3% due to employee severance costs and unfavorable changes in foreign currency exchange rates, partially offset by lower other administrative costs. The effective tax rate was 20% compared to 5.9% for the same period last year. Oh, wow. Why'd their tax rate go up so much? That's wild. Primarily due to a prior period one-time non-cash deferred tax benefit provided by U.S. tax regulations related to foreign currency gains and losses. Wow. So not only is their business declining, they're also getting taxed at a higher rate. That's not great. I mean, good luck to all you Nike investors. That's all I can say is good luck to all of you. Net income was $500 million, down 35%, and diluted earnings per share was $0.35, a decrease of 35%. Inventories for Nike Inc. were $7.5 billion, down 1%, primarily reflecting a decrease in units and product mix shifts, partially offset by increased product costs, primarily due to higher tariffs in North America. Cash and equivalents and short-term investments were $8.1 billion, down approximately $2.3 billion, as cash generated by operations was more than offset by cash dividends, bond repayment, capital expenditures, and share repurchases. And then just a bunch of information there. And now we wait for the earnings call. Oh, the stock's going down. We can make a stream clip. Oh no, I just lost $50,000 on Nike, dude. No, this is not good. Their business is declining. I'm going to have to sell at a loss, bro. This is not good. I got to stop saying bro in the stream clips. I think it doesn't work. I got to start crying or something. I got to start crying. My money. My money. I'm finally here for one of these. Put eyeliner on. Just come in all goth, bro. I just lost so much money on Nike. I'm gonna slit my wrists and then I'm gonna burn down something beautiful. Because this desperation is making me feel overjoyed. Yeah, where's that? I thought Nike was an easy buy. What happened? What happened, bro? I thought Nike was an easy buy. That's what everyone was saying, bro. Easy trade, easy buy. It was for sure gonna go up. $60 was for sure. What happened? Where's all those guys now? Oh, right. It's because they don't know what they're talking about. You can't listen to can't take anything random people on the internet say. Can't put any weight on it. All right. I'm gonna actually make another one because it's down a little more. I just don't know what to say, bro. I just don't know what to say. Nike's down again on earnings. Their business is declining and not doing well. This is supposed to go up. The stock is cheap. Like should go up on. That was a bad stream clip. That was a bad stream clip. I'm not good at these, bro. I'm not good at pretending like I'm losing money. No, Nike's down on earnings again, dude. I cannot keep doing this. I have lost so much money. How am I ever going to recoup my investment on Nike at this point? It seems like their business is only declining. What am I going to do, chat? Ah, there we go. That one was fire. That one was alright. I think we can take that one. We can take that one, chat. We can take that one. We take those. Dude, people in my real life see these videos. It's so funny. I've had multiple people that I know in real life be like, so did you lose all your money on this? I think it's so funny, bro. What am I gonna do, chat? It's so funny that people actually take these videos seriously. No, Nike's down on earnings again, dude. I cannot keep doing this. I have lost so much money. How am I ever going to recoup my investment on Nike at this point? It seems like their business is only declining. What am I going to do, chat? So stupid, bro. So stupid. So stupid, but it's hilarious. Just trust? No, I don't trust nothing you say. Now you're getting banned. Don't sit and try to promote a declining business in my chat. That's crazy. That's crazy, bro. Sure, you know, over a long period of time, like 5-10 years, maybe it'll go up, but yeah. I don't believe anyone in here is committed for that kind of length of time in an investment, so don't even sit and talk about it. Don't even sit and talk about it. Most of you are going to be sold out of this investment in less than 5 years. Probably, I would say a majority of you will be out of this investment in less than 1 year. Probably 6 months, but you know, if you wait long enough, maybe it'll come back. We'll see. I'm personally not interested in investing in declining businesses, but you guys do whatever you want. Yeah, it's dropping a lot now. That's what happens. Overvalued business, well, overvalued stock, declining business. It's going to be very difficult for the stock to go up. Not saying it can't. Of course it can. Any stock can go up, but yeah, it's a tough investment. Bearish chart, declining business, potentially overvalued stock. Like there's a lot of negatives surrounding Nike, but hopefully it works out for all the Nike people. Like I don't want your investment to work out, but or I don't want to your investment not to work out. Like I want you all to be successful, but at the same time, you have to realize you're investing in a declining business. So, I don't know. I don't know. Hopefully it bounces back and works out for you guys, but we'll see what happens. Oh, nice. I already have a... Get this Warren Buffett video uploaded as well. That's gonna take forever. That's gonna take forever to upload. Probably should ask random YouTuber you just met on what you do with your portfolio. You know, that's how you do it, man. That's how you get rich. You go into random YouTube live streams. You go on random Discords and you pay them like $1,000 for their course. And then that's how you do it, bro. That's just how you do it. If you ain't paying $1,000 for a course, how you making money in the stock market? It's just not possible. Didn't Apple CEO buy Nike a little while back? Yeah, last earnings he did buy. That he did. Like I said, you know, Nike is approaching fair value potentially, and potentially could be a good investment, but the business is declining and the stock is bearish as fuck, so like it's just a tough investment. So it's hilarious when people come in the stream and be like, Nike's such an easy investment. It's like, no, it's not. You're completely betting against the trend, and that is not easy. An easy investment is something that is profitable and bullish and growing. Like, yeah, I don't know. I don't know, man. I see you bought puts. No, I don't. I don't trade earnings because I'm not a beginner. I'm not a degenerate gambler or a beginner investor, so I don't trade earnings. So I don't know what you're talking about. Don't know what you're talking about, my guy. I don't think you know what you're talking about either. Nike beats earnings mid tariffs and sells off. yeah, the business is declining, their tax rate went up, uh, their stock's potentially overvalued. There's a lot of reasons why it's selling off. Just because they beat earnings doesn't mean anything. You must be new to the market. Stocks beat earnings all the time and sell off. You must be new to this. Hmm. I guess I'll just do this. I don't need to be spending all this time on a thumbnail. Ah, shit, I gotta do something like that. Okay. Um, Something like that. Was there supposed to be a conference call? Yeah, it starts in like 20 minutes. We're just waiting. Just waiting. I mean, I'll give the Nike investors one thing. They are dedicated to this stock. I'll give them one thing. I thought I was watching earnings call for about 20 minutes, then realized it was previous one. That's hilarious. That's pretty funny. But yeah, as I was saying, I'll give the Nike people one thing. They are dedicated. They are really dedicated to this investment for some reason. Even though the business is declining and the stock is potentially overvalued, they're still really dedicated to it. So I'll give them that. I'll give them that. is a good recap. I mean, it's always good to go back and research the old stuff if you're planning on holding something forever. This guy says this is going to be a shake off the weak hands, then it's going to rip higher. The stock's only declined for the past like 8 months, 9 months. How long? Since what is that? 7 months. So I don't know what you mean it's going to rip higher when it hasn't even ripped for like 7 months. Like, sure, yeah, it could go up, and it's actually only gone down for the past 5 years. So I don't know. Is that really like, is that what people like? They like investing in super bearish stocks, or stocks where the chart's like only straight up. There's no like in between. That's just odd. Investing in something that's been in a 5-year bear trend, like that's pretty interesting. That's a new definition of fading the trend. Investing in a 5-year bearish trend. That's a brand new definition to fading trend. What does Nike have to do with AMC? Like, what are you talking about, bro? Literally has nothing to do with that. You just can't have like a good conversation with people about these things. They're already like, nope, it's the best. It's not on a 5-year bearish trend. The business isn't declining. It's the best. It's like, no, it's not. If it was a good stock, if it was a good business, the stock would be bullish. It wouldn't be creating lower lows and lower highs for the past 5 years. What's up, William? NBA is still the best league in the world. What does the NBA have to do with Nike's business declining? Somebody said that about the NFL earlier. Like, what does the NFL, NBA, what does all that have to do with Nike and their business not doing as good as it was a year ago? It just, I don't know. The way people view the market is just so odd. You're trying to like, I bet the NBA is like a tiny piece of Nike's business. So why are you trying to make it seem like the NBA is this big thing towards Nike's business when it's most likely not? It's probably like 1% of their business, maybe a little more. I don't know, but it's probably not big enough to like matter. So I don't know why that would matter. Someone literally said that earlier about the NFL. Like, it just doesn't make any sense why that's even relevant. Ah, the music. Turn it off. Why wouldn't it let me turn it off? Okay, there we go. Why is this being all weird? It's like glitched out for some reason. For some reason, I can't see the bottom tab of this. I'm so confused by it. Yeah, I don't know what's going on there. What the heck? This is like messed up. Here, let me get rid of that. Try again. Try again here. What is going on? Why is this being so weird? The split screen's like messed up right now. For some reason. What the heck? Why is the split screen all messed up? I'm so confused by that. Okay. I don't really get why that's doing that, but whatever. There we go. There we go. Now let's see if I can get the split screen to work. There we go. That was really weird. It was like glitched out. Couldn't, Oh, did I accidentally separate the tabs? Is that why? I think I might have accidentally clicked one of those buttons. Okay. I got it figured out, though. We got it figured out. What are those? Bro, I'm about to get me some of these. You wouldn't rock these, bro? You wouldn't rock those shoes? Those are fire. What do you mean? Nike's not a failing brand. That's some innovation right there. Innovation, high quality material. straight from the Chinese factory. Like look at those fucking weird slipper croc things. that's that's a quality piece of footwear right there. That's what you're investing in. This is what you guys are all excited about and think is gonna. It's like a revolutionary investment because it's been on a 5-year bear trend. This is what you guys are investing in. Like what the fuck are these? What are these shoes? What are those? I think. What are those actually? Can someone tell me what are those? Can you guys also hit the like button? How is there over 80 people in here and 14 likes? Like that doesn't make any sense. I think you guys got to run up that like button, especially if you want to hear this earnings call. We need some like 69 likes at least, minimum. 69 likes is the minimum. Yeez red boots. Yeah, they do look like some weird like wannabe Yeezys for sure. Those shoes are bad. Moon shoes from the 90s. Moon shoes! Moon shoes! Jumping up and down like a kangaroo. Moon shoes! Moon shoes! Oh, bro, moon shoes? Moon shoes were fire. Bring back moon shoes. I see Chinese people wearing those. I've never seen anyone wear these. That'd be crazy. I wouldn't be surprised to see someone wearing these, but I would definitely laugh. I would definitely laugh if I saw these out in the wild. I think you deserve to get grilled if you're wearing these things. Especially the weird, like, red croc slipper sandal shoe things. Like, what the hell are those? Like, these at least look like normal shoes, but, like, what is this? What are these weird croc slipper things? Like, what is that? This is the weirdest shoes. The weirdest shoes. Moon shoes. Moon shoes. Can we look up a picture of moon shoes? These things. That's what these slippers look like, bro. Moon shoes. that's you might as well just wear moon shoes. You'd be better off. They're a lot more stylish. They look like you might be able to jump a little bit higher with some moon shoes rather than these. I don't know. I think you should get some moon shoes. Your homie's back? Oh yeah, that is him. I think that's funny that he made a different account just to come back. It's all good. It's all good. He's only down like $4,000 or something off of one earnings report. He definitely knows what he's doing. Take his word for it. He knows what he's doing. He invested in Nike like 2 days ago. So he's in it. He's in it for the long term. Makes me not want to invest in the company these shoes. Hey, later, Moose. Appreciate you, bro. Appreciate you always supporting. Have a good rest of your day. Moon shoes, moon shoes, jumping up and down like a kangaroo. Moon shoes, moon shoes. Shoes that defy gravity. The woke Jaguar commercial? I don't think I've ever seen that. I don't think I've ever seen that. But the earnings call starts here in a little bit. Or else I would maybe try to watch it. The people want the Nike earnings. They love declining businesses and bearish stocks. Give the people what they want. A week ago, it was AI and tech. Now it's stocks that have been on 5-year bear trends and declining. It changed quick. I'm just kidding. I just don't remember there being this many people in here for Nike earnings last time. I could have sworn it was like 20 or 30 people. Seems like it definitely seems like Nike got a new wave of investors. This earnings call should be starting any minute now. Yeah, make sure you guys hit that like button. I don't think asking people to like the video works anymore, bro. It's too much effort to click a little thumbs up button on the screen. Does anybody still wear Nikes? That's a good point. That's a good point. I don't. And I don't think I would ever buy Nikes either. New Balances all day. You ain't gangsta unless you got a pair. Yeah, bro. You got to get some jean shorts, some high white socks, good Hawaiian shirt, a nice grill, some burger patties. You got yourself a good time right there. You got yourself a good time. Damn, Nike's still dropping. Still dropping. I only wear mine when I'm eating chicken wings. Okay. Interesting. OnCloud killed Nike. What the hell's OnCloud? I've never heard of that. So I don't know if that killed Nike because I've never heard of that. The earnings call should be starting any minute now. Any second now. Where are they at? Where they at? They're late. They're late. Make sure you guys hit that like button. The more likes we have on the video, the faster these guys come in. They're late because you guys aren't hitting the like button. If you guys hit the like button, they would actually get here for the call. Yeah, they're late because of you. They're like, nah, these guys can't even hit a like button. Dude, this guy is like obsessed with Nike for some reason. He probably doesn't even own a pair of Nikes, yet he's over here like glazing Nike. Do you even have a pair of Nikes in your closet right now, bro? I almost guarantee you don't. You just glazing just to glaze? Exactly. Don't even have a pair of Nikes, bro. That's crazy.
Call. For those who want to reference today's press release, you'll find it at investors.nike.com. Leading today's call is Paul Trussell, VP of Corporate Finance and Treasurer. I'd now like to turn the call over to Paul Trussell.
Thank you, operator. Hello, everyone, and thank you for joining us today to discuss Nike Inc.'s third quarter fiscal 2026 results. Joining us on today's call will be Nike Inc. President and CEO Elliott Hill and EVP and CFO Matt Friend. Before we begin, let me remind you that participants on this call will make forward-looking statements based on current expectations, and those statements are subject to certain risks and uncertainties that could cause actual results to differ materially. These risks and uncertainties are detailed in Nike's reports filed with the SEC. In addition, participants may discuss non-GAAP financial measures and non-public financial and statistical information. Please refer to Nike's earnings press release or Nike's website, investors.nike.com, for comparable GAAP measures and quantitative reconciliations. All growth comparisons on the call today are presented on a year-over-year basis and are currency neutral unless otherwise noted. We will start with prepared remarks and then open the call for questions. We would like to allow as many of you to ask questions as possible in our allotted time, so we'd appreciate you limiting your initial question to one. Thank you for your cooperation on this. I'll now turn the call over to Nike Inc. President and CEO, Elliott Hill.
Thank you, Paul. Last quarter, we said we were in the middle innings of our comeback. Since then, we have continued to take meaningful actions to improve the health, quality, and foundation of our business. While we are not satisfied, I am confident that our progress in the areas we prioritize first through our Win Now actions point to where we are ultimately heading across our portfolio. Because of the scale and breadth of the Nike portfolio, that progress will not happen all at once. We have approached this comeback deliberately across brands, sports, geographies, and channels, with some parts of the portfolio moving faster than others. One of the most important actions we took this quarter was further removing unhealthy inventory of our classic footwear franchises from the marketplace. That created roughly a 5-point headwind to our reported results. It was intentional. It was necessary. And while it weighed on the quarter, it is improving the health of the marketplace, the quality of our revenue, and the foundation for more sustainable growth ahead. As we were removing unhealthy inventory, we focused first on the areas that create the greatest impact. We focused on our sport offense in running, our largest performance sport, and in football, the beautiful global game. We focused on athlete-centered innovation, building platforms that can scale across multiple sports and price points over time. We focused on our wholesale business, the environment where the majority of our consumers shop and where we needed to prove we could compete and win back market share. And we focused on paying it all off in North America, our largest geography that drives nearly half of our business. These are the dimensions that are furthest along, and each is absolutely essential to turning around this company. At the same time, other parts of the portfolio, including Greater China, Converse, and sportswear, are still earlier in their comebacks. We have new leadership in place, clearer strategies taking shape, and structural changes underway designed to strengthen these businesses over the long term. We are moving with urgency. We're not simply fixing what needs to be fixed. We're building brand by brand, sport by sport, country by country, partner by partner. We're reshaping our marketplace, rewiring how we operate, and investing in the technology platforms that we expect will help us serve more consumers better and run our business more effectively. These actions will continue to create near-term pressure, but we believe they are the right actions to strengthen Nike for the long term and create more durable value for shareholders. This is complex work, and parts of it are taking longer than I'd like, but the direction is clear. The urgency is real, and the foundation is getting stronger. By the end of the calendar year, we expect to have finished our Win Now actions. Aged inventory across the marketplace will be healthy, allowing our sports teams to consistently flow athlete-led, innovative, and coveted products in all sports across our 3 brands, including Nike Sportswear and Jordan Streetwear. Our marketing teams will be creating even more locally relevant, inspiring stories in key countries and cities around the world. Our account teams will be elevating those stories and our brands at point of sale with consumer right assortments and presentations, which will all result in more balanced, profitable, and sustainable growth across the integrated marketplace, owned and partnered, digital or physical. And because we are now far enough into the work and clear enough on the path ahead, this fall, we will share a more detailed long-term view of the business at an Investor Day at the Philip H. Knight campus in Beaverton. We look forward to sharing more about the future of Nike later in the calendar year. Turning to the quarter, I'll start with the dimensions that I consider to be progressing fastest in the comeback. Nike Running was the first team to move into the sport offense. They created a clear product construct based on athlete insights, segmented and differentiated assortments across an integrated marketplace, and elevated our presence in storytelling at retail. The consumer is feeling the impact of the full offense, with Nike Running up over 20% for the quarter. Nike Running has created the roadmap for other sports to follow. Global football is the next sport to fully transform into the sport offense. For the World Cup 26, it starts with our footwear construct that successfully launched the Tiempo in Q3, and we will unveil the new Mercurial in June. In apparel, we'll deliver AeroFit kits for our competing Nike federations, including a Jordan away kit for Brazil. We're also utilizing the World Cup as an opportunity to catalyze the football marketplace for quarters to come. By the end of the tournament, we will have elevated our presentation in more than 5,000 football doors around the world with wholesale partners and Nike Direct. Because winning in football goes beyond winning the World Cup. We went through the Clásicos, the Derbies, in Copa, with colleges and youth clubs in every neighborhood, season after season. In innovative product, we're back to leading big ideas for our industry. In just one quarter, we delivered both footwear and apparel platforms with deep insights that leverage years of scientific research from our labs, owned IP, and advanced manufacturing. Our new Nike Mind platform, with over 150 patents filed globally, was the highlight of the quarter. Designed to help athletes clear away distractions pre and post competition, the Mind 1 sold out in all geographies. We responded by doubling production of Nike Mind over the next 2 seasons to meet demand from more than 2 million consumers who signed up for Notify Me on Nike.com. Following Nike Mind, we introduced several early-stage innovation platforms this quarter. We used Nike Air for the first time ever as a self-inflated thermal layer in apparel, unveiled a new Liquid Air Max platform that is low to the ground and moves naturally with the foot. And we delivered AeroFit for football, our new elite apparel cooling platform that increases airflow by 200% over regular dry fit. It will expand into multiple sports, including Nike running in the fall. These platforms are scalable foundations for growth that we can extend into multiple sports and price points over time. Recently, our leadership team reviewed our full innovation agenda for 2027 and 2028 by brand and by sport. That focus is showing up in sharper athlete insights and more complete head-to-toe solutions. And we're excited to share a vision for the future of sport with you this fall. And yes, innovation sparks demand, but products alone don't deliver long-term growth. For years, we were running a Nike Direct first offense. Now, we are rebalancing our offense through an integrated and elevated marketplace and running a key city offense. These moves require us to rewire our supply chain and upgrade our technology platforms. You saw the early signs of those actions this quarter, and it is a critical step in our return to double-digit EBIT margins. Many of our Win Now actions are being paid off first in North America. One of our strongest executions this quarter was the NBA All-Star Weekend, which connected us to consumers and drove full-price sell-throughs while deepening our wholesale partnerships in Los Angeles with Shoe Palace, Dick's, and Foot Locker. The experience set the tone for how we will show up in LA for the World Cup, Super Bowl, and the 28 Olympics. Across all dimensions in North America, our wholesale momentum is accelerating. In sporting goods, Dick's and Academy are leaning in with us to tell more sport performance stories. We're building long-term plans with Foot Locker and JD and Athletic Specialty. And we're fully committed to our partners in running specialty, football specialty, and city specialty through our investments in product innovation and presentation. Ultimately, this is about creating a more profitable business model for both sides of the partnership. In Nike Direct, we've elevated our own experiences, setting the standard for how our brands show up in the marketplace. We've intentionally cleaned the market in all channels. The teams are hyper-focused on consumer right assortments and presenting them in environments that tell our best innovation stories, all with the goal of accelerating sell-through. If running shows what our sport offense can do, North America shows the power of our complete portfolio in an elevated, integrated marketplace. From here, we expect that to translate into consistent growth in North America. I'll finish with the areas of our business that are earlier in the journey, starting with our growing portfolio of emerging brands. This quarter, we tapped into the energy of the Winter Olympics in Milan and Cortina to build excitement around ACG. It was a world-class execution that showcased the ACG logo on all Team USA athletes. We executed creative brand marketing, including an experiential train from Milan to the Alps called the All Conditions Express, and we elevated our presentation in more than 600 retail doors around the world, including a standalone ACG door in Beijing. The Nike ACG team is committed to serving the outdoor athlete by creating the world's most innovative footwear, apparel, and accessories, building our presence authentically over time by supporting world-class racers and events, and building long-term partnerships with the retailers who authentically serve outdoor athletes. The outdoors is a tremendous opportunity for Nike as we bring excitement and a fresh perspective to the consumers and the industry. In Nike Sportswear and Jordan Streetwear, our teams are moving from playing defense to playing offense. Matt shared last quarter that by the end of this fiscal year, we will have intentionally reduced over $4 billion of revenue from the peak levels of classic footwear franchises. A cleanup of that scale is significant and has taken several quarters to execute. From here, we're investing in a more sophisticated city offense, one that incubates new styles through different consumers and channels, account by account. And as you know, there is both an art and a science to seeding, igniting, and scaling new sportswear styles. A great example this quarter is the strong sell-through we drove around the globe with a more thoughtful approach to the reintroduction of the Air Max 95. That city-led approach is especially important in EMEA, where we lack a fully integrated marketplace, and it has been one of our biggest hurdles. The team is responding with a more complete street-up model, working more closely with wholesale partners to improve point-of-sale storytelling and seeding in the community. In EMEA, you'll see us show up more as a local Nike. Greater China, too, will benefit from a more local approach and closer connection with the consumer on the ground. We have become clearer on the structural challenges in China and the channel dynamics in the marketplace. We are taking action to clean the marketplace, tighten execution across digital and physical retail, and rebuild the brand locally through sport. It will take time, but we remain confident that serving 1.4 billion potential athletes in China is one of the most powerful opportunities in sport. In Converse, the team took some decisive steps this quarter to bring the brand back to a healthy business. Converse is a beloved brand that serves a distinct consumer through their connection to creative culture, music, and youth. Converse will remain an important part of the Nike Inc. family, and we are excited about its long-term prospects. Overall, the work is not finished, but the direction is clear. Our teams are moving with focus and urgency. and our foundation is getting even stronger. I'm going to pass it over to Matt, and I'll come back on to close out the call.
Thanks, Elliot, and hello to everyone on the call. As Elliot outlined, we are seeing real progress across the business. Our initial focus on sport was important because it set the strategic repositioning of our brands. Momentum in running continues to be strong, and we expect football, training, and basketball to return to growth over the next few quarters. Yet sport dimensions currently represent less than half of our total portfolio, and sportswear continues to be a headwind to revenue growth as it declined low double digits in the quarter. In the marketplace, relationships with our wholesale partners are strong, and our ways of working look very different than they did 12 months ago. Order books are growing, and we are taking back shelf space. However, sell-through trends are not yet where we want them to be. Despite making progress versus a year ago, digital is still too promotional. Markdowns across the marketplace remain elevated. Our teams are pulling levers to manage inventory and protect brand health, but this continues to be a headwind to gross margin profitability. While our comeback is taking longer than we would like, we are confident we are on the right path, and we have a clear set of plans in place to complete our Win Now actions by the end of the calendar year. Now let me turn to our third quarter results. For this quarter, revenues were flat on a reported basis and down 3% on a currency-neutral basis. Nike Direct was down 7%, with Nike Digital declining 9%, and Nike Stores down 5%. Wholesale grew 1%. Gross margins declined 130 basis points to 40.2% on a reported basis, primarily due to 300 basis points associated with higher tariffs in North America. SG&A was up 2% on a reported basis versus the prior year, due to employee severance charges we incurred in the quarter. We also had other income from legal settlements. Our effective tax rate was 20%. Earnings per share was 35 cents. And inventory decreased 1% versus the prior year, with units down mid-single digits. Let me provide some additional context on the $230 million charge we incurred this quarter due to employee-related severance costs, primarily in supply chain and technology. During the pandemic, we accelerated investments across supply chain and technology to support a larger digital and direct business. Those investments also resulted in a higher fixed cost base that weighed significantly on our EBIT margins as revenue came down. Given the strategic shifts we have made to serve a more balanced and integrated marketplace, we have begun to take meaningful steps to reset our cost base to improve Nike's long-term profitability. Our specific actions in the supply chain will lower costs, streamline operations, and reduce capacity in our distribution network. Over time, we will shift our supply chain network to become more of a variable cost versus the higher fixed cost structure we have today. In technology, we continue to optimize our workforce, rationalize programs, and leverage new advanced capabilities. We also right-sized operating costs at Converse this quarter, which was included in this charge as well. We continue to evaluate opportunities related to supply chain, which could result in additional financial impacts in future quarters, though we believe the actions taken this quarter will represent the largest financial impact. We expect benefits from these actions to begin in fiscal 27 and continue to build through fiscal 28. Now I will turn to performance in the geographies, including key highlights and actions we are taking to drive progress against our Win Now actions. In North America, Q3 revenue grew 3%. Nike Direct declined 5%, while Nike Digital was down 7%. Nike Stores were down 1%. Wholesale grew 11%. EBIT declined 11% on a reported basis. North America is leading our comeback and is well positioned to sustain the momentum as we move forward. Running and global football grew double digits, with basketball up high single digits, while sportswear declined double digits. Our digital business improved sequentially throughout the quarter, driven by strong launch and growth in key sports, as well as continued improvement in average retail discounts. Wholesale revenue growth was driven by new distribution and lapping marketplace management actions with existing partners in the prior year. While sell-through has been below plan, sell-through improved in February, and we drove positive growth in all channels in the geography for the first time in 2 years. Inventory dollars grew low single digits, while units were down high single digits, with the spread primarily due to tariffs. Closeout units remain low, and the mix is healthy. From a margin recovery perspective, North America gross margins declined 360 basis points versus the prior year, despite nearly 650 basis points of gross impact from new U.S. tariffs. Underlying profitability has now improved over 3 consecutive quarters, giving us confidence that we can recover the transitory headwinds to margin associated with our Win Now actions. And last, we are increasingly confident we are on track to return to balanced growth in North America across both Nike Direct and wholesale channels in the near term. In EMEA, Q3 revenue was down 7%. Nike Direct declined 13%, with Nike Digital down 6% and Nike Stores down 20%. Wholesale was down 4%. EBIT increased 7% on a reported basis. EMEA presented both progress and challenges in the quarter, and the team continued to take action in a highly promotional marketplace. Our performance business continued to build momentum, led by double-digit growth in running. Sportswear was down double digits, and sell-through has not tracked with sell-in expectations. Promotions across the marketplace were up versus the prior year as partners manage inventory. We were also more aggressive with promotions on Nike Digital at the end of the season, which resulted in higher markdowns and a higher off-price mix. Inventory grew double digits versus the prior year, with units up mid-single digits. Given the softness in sportswear, traffic patterns, and promotions across Europe, as well as recent disruption in the Middle East, we anticipate ending the fourth quarter with elevated inventory. In Greater China, Q3 revenue declined 10%. Nike Direct declined 5%, with Nike Digital down 21% and Nike Stores up 1%. Wholesale declined 13%. EBIT increased 11% on a reported basis. This quarter, we made forward progress in Greater China. Running grew double digits in the quarter, and we also saw growth in tennis, golf, and ACG, and kids was flat. Sportswear declined double digits as expected. Wholesale sell-in was managed down, while seasonal sell-through rates sequentially improved. We expanded our Nike store pilot to 100 doors, including our House of Innovation door in Shanghai, obsessing store assortments, storytelling, and replenishment. And this resulted in traffic and comp sales improving versus the prior year. We implemented shifts to manage our brand presence differently across all digital platforms, pulling key styles off discount, resulting in higher full price realization for these styles. Inventory was down mid-teens versus the prior year, with units down more than 20%, and partner inventory also declined double digits. With new leadership now in place, we expect to take additional actions to improve our position in the coming quarters. We will continue to reduce near-term sell-in to align with full price demand, clean up the digital channel, and reduce the amount of aged inventory in the marketplace. We expect these actions will continue throughout fiscal 27 and remain a headwind to revenue growth, while profitability should bottom sooner as marketplace management makes progress. In APLA, Q3 revenue was down 2%. Nike Direct declined 8%, with Nike Digital down 12% and Nike Stores down 3%. Wholesale was up 3%. EBIT declined 4% on a reported basis. In the quarter, we saw bright spots with running up double digits and growth in training and football, while sportswear declined double digits. We had a strong launch of Nike Skims in Australia and Korea and launched new cricket footwear innovation at the T20 Cricket World Cup. Nike flagship stores in Tokyo and Seoul drove positive growth for the quarter. While inventory grew high single digits versus the prior year, units declined low single digits as the team made progress in certain countries. Closeout mix remains elevated, and the team is focused on the actions to address excess inventory over the coming quarter. We expect performance across territories in APLA to remain mixed in the near term. Now I will turn to our outlook. You heard Elliott say that while our comeback is taking longer than we would like, we have a clear set of plans in place, and we expect to complete our Win Now actions by the end of the calendar year. Over these next 9 months, there will continue to be puts and takes across the revenue and gross margin lines of our business. At the same time, we are even more confident in where we are headed. Therefore, we want to provide greater visibility to how we see the business trend from here through the end of this calendar year. We expect revenues to be down low single digits versus the prior year, with gains in North America offset by declines in Greater China, driven by intentional reduced sell-in and marketplace management actions over that period. While the tariff environment has been uncertain, assuming no significant changes, we expect the first quarter of fiscal 27 to be the final quarter where higher tariffs continue to be a material year-over-year headwind to gross margin. We expect gross margin expansion to begin in the second quarter due to actions to mitigate tariffs and recovery of transitory impacts from Win Now. We expect earnings to be flattish, with gross margins beginning to inflect and disciplined SG&A management, setting the foundation for earnings recovery from there. We also recognize that the environment around us has become increasingly dynamic, and we could experience unplanned volatility due to the disruption in the Middle East, rising oil prices, and other factors that could impact either input costs or consumer behavior. We are focused on what we can control, and these assumptions reflect the macro environment as it stands today. Now I'll share a specific outlook for the fourth quarter of fiscal 26. We expect revenues in Q4 to be down 2 to 4%, with modest growth in North America despite lapping a value liquidation in the prior year, largely offset by declines in Greater China and Converse. We expect Greater China to be down approximately 20% in the fourth quarter, reflecting reduced sell-in that we highlighted last quarter, as well as accelerated actions to clean up the marketplace. We anticipate a 2-point benefit from foreign exchange. We expect sequential improvement in gross margin, with Q4 down approximately 25 to 75 basis points, including 250 basis points due to higher tariffs in North America. We expect Q4 SG&A dollars to be flat to down slightly. We expect other expense, net of interest income, to be an expense of $15 to $25 million in the fourth quarter. And we expect our full-year tax rate to be in the low 20% range. And last, we will return to providing full-year and long-term guidance at our Investor Day in the fall. With that, I'll pass it back to Elliot.
Thanks, Matt. Before we move to your questions, I want to leave you with an image that stayed with me from this quarter. I was in Barcelona meeting with athletes and leaders from FC Barcelona, a partner of ours since 1998. And I stood on the pitch at Camp Nou. If you've ever been there, you know it is more than a stadium. It is one of the most imposing stages in sport. A place built for pressure, belief, and unforgettable moments. And right now, Camp Nou tells another story too. Above the pitch, there is scaffolding. In the corners, there are cranes. Entire sections are unfinished. The stadium is being rebuilt tier by tier, piece by piece, to accommodate over 100,000 supporters. The work is still underway. Capacity right now is limited, and it requires patience and perseverance. And still, the supporters are in full voice. The players are still stepping onto the pitch, focused on competing and winning. And all around them, the work is transforming what their home, their club, will become. What stayed with me was the reality of both things being true at once. Competing today while building for tomorrow. FC Barcelona did not choose between performing in the present and preparing for the future. They are doing both at the same time. Standing there, looking up at the half-built stadium, it occurred to me, this is Nike right now. We are taking deliberate actions that we believe will restore the health and quality of our business, even when these actions create pressure in the near term. We are removing what is not working. We are rebuilding parts of the foundation that needed to be rebuilt. And at the same time, we are continuing to innovate, to compete, and to create for the future. That takes conviction. It takes patience, it takes belief, and it takes focus. Camp Nou is being rebuilt for the next, not being rebuilt for the next match. It is being rebuilt for the next era. That is exactly how I think about the work we are doing at Nike. I came back to help return this company to greatness and to build it the right way for the long term. To protect what has always made Nike special and to modernize it for a new generation of athletes and consumers. So while the work is not finished, the direction is clear. Our focus is clear, and our comeback is within reach. And this fall, we look forward to sharing a fuller view of that path ahead at our Investor Day. With that, let's open it up for questions.
We will now begin the question and answer session. To ask a question, press star, then the number 1 on your telephone keypad. We kindly ask that you please limit your initial question to 1. Our first question will come from the line of Lorraine Hutchinson with Bank of America. Please go ahead.
Thanks. Good afternoon. The performance in the EMEA seems to have decoupled from some of the early successes you've seen in North America. How do you diagnose the problems, and what's the strategy to fix it?
Well, Lorraine, as I highlighted, EMEA presented both progress and challenges in the quarter. And I think that as we've implemented the Win Now actions across that geography, we are seeing growth in performance. We're seeing running up double digits, and we're really excited about the plans that we've got in place for the World Cup, as well as the way that we're setting up the marketplace for both upcoming product launches in both running and in training. This quarter, we highlighted that we didn't see sell-in where we were hoping sell-in to be, specifically on our sportswear business. And it's really connected to a theme that we've been talking about for several quarters. We've highlighted some of the macro pressures that we've been seeing in EMEA over the last few quarters, and specifically that marketplace has seen challenges in traffic and also a higher level of promotional activity. And so this quarter, as we saw sell-through trending below our expectations, we saw our partners start to be more promotional, and we also were more promotional to manage inventory across this large marketplace. And this quarter, we also experienced traffic disruption from the Middle East, and we also are taking that into consideration as we're thinking about where this business stands and also as we look forward. So we've been aggressive, as I mentioned, with our teams pulling levers in order to keep this marketplace clean and healthy. Our closeout mix is at a really good level. And while we expect to exit the fourth quarter with elevated inventory in EMEA, we're confident, given the size of the issue and the way that our teams are responding, that we will be able to continue to work through the win now actions in this geography as well by the end of the calendar year.
And Lorraine, the only thing just to add to that, we do have a new leader in place. I have tremendous confidence in Cesar Garcia. He's a 25-year Nike veteran. His deep and broad product and marketplace experience, and he's a tremendous leader. The team is really focused from a product perspective, and Matt touched on some of this, moving from being so sportswear reliant to also be really focusing in on performance, where we have growth in running, training, and football. So I like what they're doing there. They are now getting back to driving a more elevated and integrated marketplace. And then they are focused on making certain we have the right assortments in those doors, elevating the presentation and driving sell-through with our strategic partners. And so overall, I'm really pleased with the actions that the team are taking.
Our next question will come from the line of Adrienne Yih with Barclays. Please go ahead.
Thank you very much, and thanks for all of the color. Thanks for the forward guidance, actually. That's my question, is going to be, so you're talking about the end of the calendar year, but your quarters kind of split the calendar year kind of in the middle. So I'm wondering if we should be thinking about revenue. You said down low single digit for that horizon, with North America up and improving, which would suggest that Greater China is meaningfully negative, probably climbing from that -20. So just a little bit help there with the shaping and what exactly is it, February quarter? The earnings being flattish would suggest 15% maybe haircut to where, significantly more than where the street is. So again, is that flat for the fourth quarter on EPS through the February quarter? And then should we think about the May quarter of that year sort of having a big inflection? Sorry for all the kind of convoluted questioning, but thank you.
Yeah, Adrienne, I'm going to jump in first. I see Matt wrote down all the questions, so I think he's ready. But here's what I want to make certain that everyone hears on the call. We're even more convinced now that the win now actions were and remain the right strategic moves. We've made meaningful progress improving the health, quality, and the foundation of our business. We talked about that. And really, the areas that we said we were going to make the most progress, the ones that we knew made it the most impact, are some proof points that the actions are working. If just at a high level to go through the actions, we first said culture was number one. We have the teams galvanized around sport and growth. Product was the second one. We're driving the sport offense. We just moved into the sport offense in September. Spring 27 will be the first quarter where we will have product flowing into the marketplace from the sport offense. And running is a proof point this quarter. It's up double digits. Nike football is also getting back to growth. We have innovation coming. We talked about Mind and AeroFit. The wholesale business is back to growth, and we're paying it off in North America. So I'm really pleased with those proof points that the win now actions are indeed making an impact, and know that we are moving quickly against Greater China, Converse, and sportswear. We have new leaders in place. We're creating thoughtful long-term strategies, and we're making structural changes. And what I want to leave you with before I hand it over to Matt is that these are deliberate actions, and we are not just fixing. We're building brand by brand, sport by sport, country by country, and partner by partner. And I will acknowledge that parts of it are taking longer than I would like, but we believe the direction. We're moving with urgency, and the foundation is getting stronger. So I'm really feel great about that.
And Adrian, on the specific guidance question, I guess what I would say is that we've been providing 90 days of guidance for the last 5 quarters since Elliott returned, and we've been consistently asked for greater visibility as we had confidence in the trajectory of the business. And given while this comeback has taken longer than we'd like, with North America's continued momentum and a clear plan in place through the remainder of the calendar year, our approach to providing guidance for the calendar year is really about pulling up at this moment and providing transparency to the financial trajectory of the business over the next 9 months. So I think of it as, it includes this quarter and then it carries through over the next 9 months. And we're lining that up with the timeline that we've set to complete the Win Now actions by the end of the calendar year. Specifically, your question about some of the elements of shaping, without getting into the specifics of November versus December, what I'd say is that, we expect revenue to be down low single digits over this period. We do expect the momentum to continue in North America. And so we're planning for modest growth in North America, even as we continue to lap the value liquidation that we've been doing this year. That's going to be offset by headwinds in Greater China. It's partly related to what we've been talking about, which is continuing to reduce the sell-in so that we would, meet full price demand, and also some of the actions that we're continuing to take in the marketplace in order to be able to clean it up. But I think the important point is that we expect margins to inflect in Q2. And that is a big moment, I think, for us as we've been navigating through the costs associated with the Win Now actions and dealing with the newly implemented tariffs. And I think our confidence in margins inflecting positively in Q2 while we're managing SG&A tightly really sort of sets the table for inflection in earnings as we go from there.
Our next question will come from the line of Simeon Siegel with Guggenheim Securities. Please go ahead.
Thanks. Hey, good afternoon, guys. In the spirit of all this information, which again, thank you. I know you guys don't normally give this detail, but any color you can share on D2C gross margins or just any way to think about the health of that channel. I know I've gotten a lot of questions around wholesale growth versus D2C declines. It just might be helpful to hear a little bit more about the quality of those D2C sales versus the reported declines, Elliott. And then Matt, just could you quantify the severance booked into the operating overhead this quarter? Is that the full $230 million? I'm just trying to think through the change in operating overhead on a recurring basis and how you're thinking about operating overhead expense into next year as you further variabilize the P&L. Thanks, guys.
Yeah, thanks, Simeon. Let me jump in, and then Matt, I'll let you take the specifics around the DTC questions. But here's what I want to make sure that everybody on the call understands. We had been servicing our consumers with a direct-to-consumer model. And now we are moving to serve the consumers wherever, however they choose to shop with us. We want to make certain that we're managing our business across a balanced and integrated marketplace. That is the strength of Nike, is when we're able to have a portfolio of places that we serve consumers. And we're making certain that we segment and differentiate the assortments across multiple channels. Nike Direct is certainly a part of that, but we are also making certain that we serve consumers in specialty, sporting goods, athletic specialty, department stores, family footwear, and digital and physical. That's the power of Nike, and I think we're doing a much better job of working directly with our partners, developing long-term plans, and making certain that we gain back shelf space and ultimately share. So again, yes, DTC is critically important to our success moving forward. I want to make sure you hear me say that, but also I want to make certain that you guys hear that a integrated and balanced marketplace is also critically important.
And specifically to your question about the quality of the DTC business, what I'd say, Simeon, is that North America is the geography where we saw the most improvement in the quality of the business in direct, and specifically, I'm really specifically talking about digital. We did, with our focus on sport, see strong results across our Nike stores around the world, lining up against sport, getting behind key sport moments. But on the digital side in North America, we saw continued improvement in the gap between wholesale and direct. And when we look at the quality of that business in North America, we continue to be encouraged. I mentioned a couple things on the call, but we saw sequential growth throughout the quarter, driven by strong launch. That's across both Nike and Jordan. We saw growth in key sports on digital, and we saw continued improvement in average retail discounts in North America. We saw demand on the Nike app grow in Q3 in North America. And as I mentioned, we saw sell-through overall in the marketplace in North America in February inflect up. And it was the first time in 2 years that we saw positive growth in all channels. So that includes wholesale and across direct. And so we continue to be encouraged that as we're getting deeper into our Win Now actions, that we're getting closer to balanced growth between wholesale and direct in the North America marketplace. And that is the playbook that we intend to take that we're taking to Europe, to APLA, and to Greater China, and what we're focused on executing through the balance of the calendar year.
Our next question will come from the line of Michael Binetti with Evercore ISI. Please go ahead.
Oh, hey, guys. Thanks for taking our questions here. I guess just to clean up if the -2% to 4% in fourth quarter is reported or currency. And then I guess bigger picture with revenues down 2 to 4 and America growing, I guess North America growing modestly, China down 20. You didn't guide EMEA in the fourth quarter, but it seems like you're triangulating somewhere close to down mid-singles. Down a bit despite the World Cup. Maybe just some shape of the major puts and takes in EMEA in fourth quarter since the revenue rate changed so much in third quarter. And I guess the follow-up there is the margins in EMEA were surprisingly strong in third quarter despite the revenue decline. Could you just comment there on maybe any color and whether those positive offsets continue?
Yeah, the comments that I made on EMEA in the third quarter, definitely impact the way we're thinking about the fourth quarter. We expect to continue to see growth in the performance dimensions. We're incredibly excited about World Cup. I mentioned that we've got strong double-digit growth in running, and we're excited about upcoming product launches in both training and running. And so training is the second biggest performance category, and it's super important to continue to build momentum as we continue to drive our training business across all sports. The real change in the quarter was sell-through on the sportswear side, and so our outlook reflects a modification to it takes us into consideration in terms of our expectation of the sportswear business in Q4 because we're managing the marketplace carefully. We've also taken into consideration not only what we've seen in the Middle East as it relates to traffic, but also our expectations of the disruption of that in this marketplace, based upon what we can see today. And so that's really the other factor that we've taken into consideration in this fourth quarter guidance. But we continue to be encouraged by the momentum in North America. We've got a strong order book for summer. We're seeing positive signs in sell-through. We're not seeing a consumer reaction to what's going on in the Middle East at this point in time in North America. And so our teams are continuing to work hard to connect with consumers and to continue to rebuild back brand momentum across that geography and the rest of the geographies.
Our next question will come from the line of Brooke Roach with Goldman Sachs. Please go ahead.
Good afternoon, and thank you for taking our question. Elliott, Matt, I was hoping to get your latest thoughts on the opportunity to stabilize the sportswear business. How much additional reset activity is needed in the Classics franchise by geography? And are you seeing any green shoots in the North America sportswear portfolio that gives you confidence that the strength and performance can translate to better momentum in sportswear over time? Thank you.
Yeah, thanks, Brooke. Here's how I think about sportswear, and I said it in the prepared remarks, but we're definitely moving from defense to offense in both Nike sportswear and Jordan streetwear, and we got to think about both of those, especially as you think about North America. Let me first start with where we prioritize, and we did prioritize our performance business, and we felt like we had to get performance products right because the sport is what drives our authenticity. It's our point of difference and distinction. It drives our best products and storytelling. And ultimately, sport is what creates a halo over the sportswear and streetwear businesses. And so we really got after the sport business and running a complete offense, making sure that we had innovative product driven by athlete insights. And now, as you're hearing from Matt and me, we're paying it off across the integrated marketplace. So it's working on the sport side. In terms of how we're doing on the sportswear and the streetwear side, here's what I would say. And I did use the specific where we intentionally pulled back, which created about a 5-point headwind this quarter of removing unhealthy inventory from those classics. And what I would say is the Air Force One and the AJ1, they stabilized this quarter. And so we're seeing month-to-month improvement in full price realization in those two franchises. And I also want to make sure that you hear me say that we see that as a positive because we believe these icons will always be staples for the consumer. We're still stabilizing the dunks, so we have a little bit of work to do there. But at the same time, the green shoots, as you call them, we're starting to see the team create some buzz around our business this quarter. That we had some really good and tremendous launches, AJ11 Gamma, the AJ5 Wolf Gray, the Nike Air Max 95, and all of them had a high full price realization and really strong sell-through. So the sportswear team's moving to playing offense, and what you'll see from us is that team taking insights from the consumers that they serve and focusing on creation around comfort, innovation, and yes, we will continue to leverage our unmatched vault. And so I'm really pleased with the progress that the sportswear and the streetwear teams are making, but we still have work to do. And that, I called that out, that, we still have work to do, but and confident in the actions that we're taking and pleased with the way the consumer is responding.
Our next question will come from the line of Brian Nagel with Oppenheimer and Company. Please go ahead.
Hey guys, thanks for taking my questions. So, Elliot, the question I want to ask, you've mentioned several times in your comments, that you're heading in the right direction, but the process is taking longer than you initially expected. So the question is that as you look at the reasons for that, is it more internal, or is it more external? The environment, in the different geographies or whatever, has proven more challenging for the turnaround efforts here.
Brian, I think it's the easy answer for me to say it's a little bit of both, right? But here's what I would say: the starting point for each geo or each country was at a different place. And by the way, each marketplace has a different structure as well. And so we had to make certain that we truly understood where each country and each marketplace was in terms of their performance across the entire integrated marketplace, again, from Nike Direct all the way through the different channels. And so, I think the easiest way to think about it is, the comeback, it is substantial, and at our size and scale, building for the future, it takes time, and it's taken longer than I would like. But what I would tell you is, we got our teams reorganized from a product perspective as well in September, and spring 27 will be the first time we see the fruits of those teams working together. But in the end, I'm pleased with where we're headed. And, I think everybody, when I came into this role, said, hey, it's going to take 2 years. And, that's where we're tracking right now. So a little bit of both, Brian. We do have some external factors that we're having to deal with while we're in a bit major comeback, but that's no excuse. We're controlling what we can control. We're getting our teams lined up internally around product and the consumer and storytelling. And then we're getting our country teams lined up around driving a more integrated and elevated marketplace. And ultimately, that's what's going to pay dividends for us and build the foundation for future growth.
Our final question will come from the line of Matthew Boss with JP Morgan. Please go ahead.
Great, thanks. So, Elliot, could you, if we take a step back, just update us on health of the global sportswear backdrop, or where does your outlook for the industry stand today relative to when you took the helm? And then, Matt, on low to mid-single digit constant currency revenue declines for the back half of the year, is there a way to parse out self-inflicted headwinds or maybe where you see underlying demand exiting this fiscal year? And what have you embedded for overall sell-through rates through the balance of the calendar year, just relative to the pressure that you cited that you've experienced to date?
Matthew, I think the easiest answer on sportswear is that it will remain a very large part of the overall industry, and it will be critical to our success moving forward. So, we're taking a streets up approach to this and making certain that we help this big giant business feel more local. And again, it takes time to seed and ignite and scale product over time, but returning to a healthy sportswear business is essential and vital to our comeback, because it will continue to be a critically important part of the overall market and an overall part of our growth. So with that said, I'm incredibly positive on the athletic industry overall, not just in sportswear. And we see it as a tremendous opportunity for us to continue to drive growth in an expanding market.
And then, Matt, to your question on sell-through assumptions, maybe let me hit revenue first. For the first half of next year, I think it's safe to look to the range we provided for Q4 as a guide for what we're expecting for revenue for those last 2 quarters. And I think it's really highlighted by the trends that we've talked about. It's North America, continuing to sustain momentum. We expect to see more balanced growth across channels. Given where inventory is in the marketplace, we expect to continue to see improvement in underlying profitability in that geography. And the top line will be tampered a little bit, like we've been talking about, because we are anniversarying quite a bit of off-price liquidation in the prior year. But it's a healthier business, it's a more profitable business, and it's a sustainable growing business across all channels of the marketplace. As you go outside the U.S., I think that we've been clear that we believe that we can complete the Win Now actions in EMEA and APLA, by the end of this calendar year. That's how you should read what we're communicating. I think that will continue to be us going deeper on cleaning up the marketplace, especially digital. And quarter by quarter, we're planning for improvements in sell-through. As it relates to Greater China, we're managing sell-in, and by managing sell-in, we expect to continue the trend like we saw this quarter of sequential improvement in of sell-through rates. And so we're managing supply in order to be able to continue to shift the mix of inventory in that marketplace to be more full price and more healthy. And that's why I gave the commentary around, while the actions we're taking will create a headwind to revenue in Greater China, we do expect to see profitability bottom faster, because it's going to be a healthier, more profitable business as we set that foundation for much more balanced growth as we go forward in China.
And that will conclude the question and answer session and our call today. Thank you all for joining. You may now disconnect.
Wow. It's crazy how much changes in an hour, you know? Everyone in here literally an hour ago was glazing Nike, talking about how good it was, saying the stock was going to go to 60. All these things. I haven't seen any of that. Now that it's down, people were saying the earnings was boring. It must not be very boring anymore. It's pretty weird how quick things change within an hour of time. Pretty interesting. But thanks for all being here. Make sure you hit the like button on your way out. And yeah, pretty much everything I expected. It's just not the best business. Not the best business. It's not bad. It's not good. It's just a good business that's declining, which isn't great. It's just not great. You know, will they be able to make a comeback into growth though? Who knows? We'll see. We'll see. So far, it doesn't really look like it, but maybe. But I guess it's time to get out of here. I don't know, there's over 100 people in here, but like 2 people typing in the chat, so that's kind of weird. But I hope you guys have a good rest of your day. Shout out to my OGs. Thanks for always supporting the stream. Any new people here, thanks for giving the stream a chance. And I'll catch you guys tomorrow. Have a good one. Peace!